transportation, can't build a single charging station. Jared Bernstein was on yesterday, chief economist for Joe Biden, has a degree in music and liberal arts. And
come on, he had been
doesn't matter.
In an interview,
these administrations pick people that they want that are maybe they're loyalists, maybe they're going to spearhead whatever.
Jared is an economist. He's been in that business for years.
He's not a trained.
I agree that he did not
explain the basics of how the Federal Reserve works.
Exactly.
In college,
He couldn't explain the basics of how a bond.
Yes, literally. He was like, "Well, I think there's."
Jared did not cover himself in glory with that video. I will not dispute that.
He teaches courses at NYU. This is not some random schmo. And he was asked a question. Well, tell us.
Charlie Kirk is on Squawk Box.
Yes.
Greg Gutfeld was just on Jimmy Fallon.
Yeah.
The worm is turning a little bit. And one point I was going to make, I have seen it. See, he's 31, so he hasn't been around to see a lot of these things. I can show you 5 former Republican presidents. Each one in the media has the little Hitler statue. I can show you it on the current guy. I can show it to you on W. I can show it to you on Reagan. This has been the way it's been for years. You know this? Do you realize?
Well, I mean, look, I grew up. I was like 10 years old during the worst of the Bush stuff. But yes, I mean, I think you would agree. It's gone to a fever pitch that we have never seen.
Trump, but people that are your age think, oh my God, this guy's the worst ever. And finally, but I saw the same stuff with W. And with Reagan.
Let me ask you a different question.
And with the win. Remember the first
ultimately like a more a country that's genuinely brought together, that trusts what's happening, that feels that everything is credible, that there's a coming together. I assume you want that?
Of course, but in a post
how could that ever happen with the left?
World, and again,
how could that ever happen with the left or the right?
I think I totally agree, and I would just say, look, in a post-COVID world,
I'm just an idealist to believe that.
Hold on, Andrew.
You're not the left. You're not intolerant.
You know where I'm going with this. Yeah. We did not receive any apologies from the ruling class that lied to us repeatedly during COVID. The lockdowns, the efficacy of the vaccine, mask mandates, school closures, and we just act as if it didn't happen. And I don't think the American ruling class understands the undermining of their credibility that happened when the entire country had their lives thwarted, especially young people. We're just supposed to like reopen the country and be like, well, why don't you trust us anymore? Well, it's because all you have, Hunter Biden laptops, Russian disinformation, 50 intel operations, sign this letter. And you know I'm making a good point here because there was no contrition.
That's just one example.
And again, I could go one after the other.
No. I would say that actually COVID, to me, I mean, this is actually generational, is actually very much like the 2008 crisis in a way. Okay, that spawned Occupy Wall Street. This has sort of spawned a different sort of political.
Do you want to do Russian collusion? Do you want to do the laptop? Do you want to do? I mean, take your pick on the way things are covered in this country.
All I'm suggesting though is this full-on, constant relitigation of what took place in the past, as opposed to a clear-eyed view of what's happening now.
I would just interject respectfully that it's not just relitigation. First of all, no one was held accountable largely for what happened.
That's why I said it's sort of like 2008, because a lot of people thought all those bankers were supposed to go to jail, frankly.
And honestly, there should have been. I think there should have been some administration of justice. That's a separate issue. I was young at the time. I can only speak about what we're living through now. And a lot of the COVID injustices we are still seeing today with younger people and their ability to own homes, with the inflation that President Trump is trying to fix that was inherited by Joe Biden. So what I'm getting at, and I know a lot of the C-suite of America watches this program, they might understand where is this populist fervor coming from, is that you have missed the mark on so many of the core proclamations you made to the American people.
Explain to me then the ascension of Mamdani.
Well, it's very, I mean, because Mamdani can be easily explained.
Could be cathartic. We need to go through this like once every 25 years.
I hope you're right.
Let's just hope nobody dies, because that's what usually happens with communism.
Mamdani can be best understood as the people that voted for him are actually more college educated than they are working class. But I think it's all driven by economic anxiety. I think it's people that don't own stuff.
It's driven by 700,000 people in a city of 8 million.
My worry about populism is, and this is true on both sides of the populist situation, that effectively voters get lied to. They get lied to about what the politicians can actually do for them. That's what populism actually is.
But the technocrats have been lying to us. It's not like this idea that populists are going to lie. President Trump's the one that's actually kept his promises. He said he was going to secure the border, and he did. He said he was going to appoint the people the Supreme Court did. But I would just say, beyond Mamdaniism, the thing I want to caution your audience is you're going to get Maggioniism. You're going to get one-off, violent targeting of people with money if we do not rebuild the American middle class. I think President Trump is doing that. The numbers show that. So I think we look at this, oh, Mamdani's the problem. The C-suite of this country should want MAGA. We will deal with you. We'll do a deal. We'll bring you in the room. We'll talk about tax cuts, tension between capital and labor, because the alternative is Maggioni and Mamdani, and you don't want that.
One last thing. I know they're playing the music. How do you feel about these sort of one-off deals that the president's been making, for example, with the CEO of NVIDIA and AMD? There's a lot of people who look at this quote-unquote industrial policy and say, this is a new form of Marxism. This is socialism.
That was one of the examples I'm using where sometimes it's difficult to just
That's what I'm very curious.
I mean, all I can say is this: he who controls the chips will control the AI future. And I think it's good broadly. Again, I need to understand all the details of it broadly. I think it's good that we finally have China addicted to something we make, that they need. And I don't think we should just throw that out. For the last 30 years, we've been addicted for China for PPE, for vitamin C, antibiotics, pharmaceutical manufacturing. Finally, we have something that China's begging for from us.
Fentanyl. You have more questions. You love this. That's great.
By the way, I like Charlie a lot. And we have a good rapport. We have a lot of fun. No joke.
It's great.
By the way, I do enjoy this conversation. I don't like the two-on-one girl, and I don't even like being put in a position that I'm on some other side all the time.
Welcome to my world.
I don't agree with a lot of things you say.
The only thing first-time viewer. The only thing I would say is that don't always represent the views of a technocratic ruling class. That's the only thing I would say, because it's a big country and it's changing rapidly, and I think it's important to listen to the concerns of a forgotten country.
Amen.
The golden age is here. Thank you.
Squawk Box, be right back.
We're coming in hot just before 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernan. Becky is off today here in the middle of August. August 13th is the day. Among today's top stories, the Trump administration reportedly considering changing how the government collects and reports jobs data. The Wall Street Journal reported that officials are looking at some different technologies to try to make the process more efficient. Meantime, Treasury Secretary Scott Bessent broaching the possibility of a 50 basis point rate cut at next month's Federal Reserve meeting. Bessent highlighting the downwardly revised jobs growth data for May and June that came in 2 days after the Fed opted to keep rates steady at the last meeting. And check out Ether this morning, trading at around $4,700. It's now up 85% in just the last 2 months. Standard & Chartered now raising its 2025 forecast to $7,500. It's now saying it could hit $25,000 by the end of 2028.
Deal news, Canada's Gildan Activewear has reached a deal to buy Hanes brands for about $6 a share in cash. We talked about this yesterday, briefly. That's a 24% premium to the stock price before the deal was first reported. I told you that, remember yesterday I said that.
Yes.
Briefly.
Yes. Briefly. Very, very briefly.
Yeah.
Another front in the war for AI talent. You got to hear this one. Microsoft now reportedly wants to poach some of Meta's top employees working on AI initiatives and has drawn up a list of its most desired workers. A Business Insider report saying that Microsoft now looking to match the best offers coming from Meta has made multi-million-dollar offers of its own. That could go a long way to matching compensation plans from Meta, which are said to be running into the 9-figure range. We talked to Sam Altman about this just last week. It sounds like there's, 200 of these sort of unicorns on the planet at the moment that could command these kind of crazy figures. Kind of remarkable what's possible.
We talked to Canner in a second. You need to spearhead that interview.
We'll discuss that. And then the consumer use of buy now, pay later continues to grow, becoming more like credit cards used for expensive purchases over longer periods with higher interest rates. Klarna, which is a major player in that space, has recently revived its IPO plans, aiming to expand beyond its initial offerings. Joining us right now is an analyst who covers that sector closely, Moshe Orenbach, TD Cowen, senior analyst covering specialty finance. Good morning to you. Buy now, pay later has become sort of the phenomenon of the credit world. The question, of course, is does it effectively push out the credit card industry, or is it just sit side by side?
Well, I think it pushes out portions of the credit card industry. Buy now, pay later was kind of created for people who either didn't want to use credit cards or didn't have a lot of open to buy on their credit cards.
And so if you were to look at the winners long term, who are the winners? And by the way, who loses? Because it sounds like if you are saying it's going to take some significant share from the credit card industry, that's pretty interesting.
Well, you got to put it in context. Right now, there's almost $100 billion of spending that goes on buy now, pay later type programs in the U.S., but the amount of debt that's actually outstanding is a small fraction of that because most of it is pretty short term. And so, it's getting larger relative to the volume, but it's not as large relative to the debt. So, but I think you would say, it is replacing credit cards. For the moment, a lot of that is usage of from people who really don't have a lot of open to buy on credit cards. The U.S. is a credit card market that is pretty rich with rewards for folks that have good credit scores and incomes and large credit limits, and that's not really what buy now, pay later is designed for. It's designed for people who are not quite in that level, might be kind of a mid-prime credit score or that type of thing, and not as much open to buy on their credit cards.
Are you a long-term believer that the credit card companies are effectively a short? And the reason I ask that is we have the Circle, we have the stablecoin guys come in, we have everybody talking about sort of remaking finance. And if finance is truly remade the way people describe, all of these fees should go down to next to nothing.
Yeah, Andrew, I've been doing this for 35 years, and we've had that discussion for most of that time. So I would just say, the the fees paid to the merchant basically go to subsidize the cost of providing credit, which includes the rewards. If the merchants really want to remake it, they've got to kind of redo that process. This is something that's been tried many times. So far, it's failed. And so I would say, to the short answer to your question is no, I don't believe they're shorts. I'd ask you to kind of look back at how many times we could have had that discussion over the last 20 years.
Right. Okay. Your top 3 picks on the upside, and what would you run from right now?
So we like on the card sides, Synchrony and Cap One, kind of equally here for different reasons, as well as what I co-cover with my partner Brian Bergen, Visa and MasterCard. We are neutral on American Express. I wouldn't say we run from it. I think in the current environment, it's just a little tougher. They benefit most when there is a lot of incremental spending. And at the moment, it looks like that's moving more sideways than not. And there's, a fair amount of competition kind of for the high-end consumer at the moment.
Okay, what about the buy now, pay later folks?
Right, we do have a buy. We have a buy on Affirm. That's the only publicly traded one that we cover right now, and we do like that quite a bit. So it's a touch more expensive now. We launched on it, the stock was under 50, and now it's in the 70s. So it is. We have a buy on it as well.
Moshe, I want to thank you for joining us. Those who want to buy that, they can buy it, but they can't pay later. They got to pay right now.
That is true.
That is a little bit of the thing. Yeah.
Thanks, Andrew.
Coming up, we're going to get you caught up on some of the big movers in the pre-market. And then at the top of the list, we have Kava, shares of the fast casual chain.
Not doing so well, but are they bringing food this morning?
That's what I was going to say. We could help that stock out if I do like their food.
It is plunging. Can we put the shares on the screen? It's not a good situation.
No, it's down almost 25%.
But you know what? I give them credit for coming on the air and talking about it.
Supposed to be growing very quickly. It's still growing.
There it is. Take a look right there.
24%.
24%, 64.50 right now.
What would you order? I like the chicken, spicy chicken.
Welcome back to Squawk Box. I'm Frank Holland with your morning movers. We're going to start off with shares of Kava. Joe and Andrew were just talking about it. Look at this chart. Shares falling more than 24% after a mixed Q2 with the revenue coming in below estimates. Same restaurant growth with just 2.1%, sharply down from its Q1 growth of 10.8%. Guest traffic roughly flat in the quarter. The fast casual chain also trimmed its full year same restaurant growth guidance. Again, shares down more than 24%. For more on the quarter, be sure to stay tuned. Kava CEO Brent Schulman, he's going to join Squawk Box coming up at 8:10 a.m. Eastern. Meantime, we're looking at CoreWeave shares as well. Take a look right now. You can see they're down more than 8% despite a Q2 revenue beat. Profit, it wasn't comparable to analyst estimates, so we're not really comparing that. Current quarter guidance, that weighed on the stock. Revenue was a slight beat, but that profit coming in below FactSet estimates. Again, stock pulling back more than 8%, but you got to keep in mind, still nearly 250% higher since its IPO back in March. Well, 240 right now after this pullback right now, but you see the big upside move following its IPO. Last but not least, we're going to round things out with shares of Palo Alto in the green this morning after Deutsche Bank upgraded the stock to buy from hold and increased their price target from 200 up to 220. They say the investor concerns around the planned CyberArk acquisition, they're just overblown, and that recent contraction, it presents a nice buying opportunity according to analysts as the core business continues humming along very nicely. That's a quote right there. Shares of Palo Alto up about 1 3/4%. Joe, I'm going to toss things back over to you. And the question is, are you guys getting some food? Are you sending some over here? Because we're all hungry, Joe.
We did it. We were doing that subliminally, Frank.
Well, no, you said it out loud.
Haven't seen anything
I don't know
yet.
if it was subliminal.
Subliminally to Kava because he's coming on, but I don't. Yeah, it was subliminal to. Yeah, I see what you're saying. Yeah, people right on TV. It's hard to do it.
Yeah, it's hard to do it between the lines when you say it out loud on TV.
I know. All right. I thought I was just telling you. All right. Thanks, Frank. Coming up, a closer look at the connection between tariffs and inflation and the debate it's sparking in the market. Spark Box. We'll be right back.
assurance.
Yesterday's headlines, just modestly higher inflation from tariffs. Steve's going to dig deeper into it, but I just want to have a conversation with you before you wrote something out. You've been crunching some numbers. You can do that in a second. Can I read something to you?
Yeah, you got something. What do you got?
So this is what we were trying to say yesterday, and I think this is good. And then I want to ask you what it would really take. For the Fed, the lack of a more alarming acceleration in price pressures likely removes an obstacle to lowering rates in response to worries about the labor market. And that kind of sums up what I think we saw yesterday. 3.1 was hotter.
Right.
Okay, for core.
The 2.7 was lower.
2.7 was lower. 3.1 is not 2. What would be what would be the salary number for core? 3.5?
I think it's kind of like there's been two criteria, Joe. How much is coming through, and is it bleeding into other areas? And those have been
You expecting
the keys.
3.5?
It's not out of the question. Guys, let's just skip the first part of this and go right to the first graphic.
Uh-oh. This is good.
We're just
Okay.
gonna,
All right.
Because this is
Because we're talking. PPI's coming today, isn't it?
PPI's tomorrow.
Oh, tomorrow. Okay.
Yeah. So
That's what I meant.
You look inside the report. These are things, Joe. What we did is we calculated prices changes from January to July. Women's dresses up 10.4%. Tools and hardware 5%. Major appliances 4.8%. You can see toys and games. These are things that normally would be going down or flat or were offsets to it. And that's really a key. Guys, if you move on here, we're doing this live here. Another way to see the change, though, is from the prior declining trend. Mike Konzel from the Roosevelt Institute found some stark reversals. Take a look here. Tools and appliance categories was heading down. That's the trend line, the dotted line there, before the reversal that likely is linked to tariffs. Similar pattern in home furnishings and dozens of other products that are mostly imported. The trend line was down, and you can see the current line is up. Konzel found that 52% of 82 items in the core basket are up more than 3%. That was a sign of persistent inflation in the pandemic. Scott Lincecum from the Cato Institute tells me, quote, the big question is whether we're starting to see it move into the service inflation, and auto repair could be a sign of that. How long margins could hold before they pass on the tariff. At the same time, sort of talking about what Joe's talking about, those who see benign tariff outcomes have been proven correct in several respects. Some prices are falling, perhaps in reaction to other things being more expensive. That's that relative price thing we've been talking about, acting as an offset to the tariffs. And tariffs may not be sufficient in and of themselves to overcome these other offsets. Take a look at yesterday's CPI. Energy was down 1.1, so that's a big offset. Food at home down 0.1. Core commodities, though, were up. That's where it really was modest. But the surprise was that core services up 0.4. So the stock market trades like it's game over in this debate between saying it ain't going to ever happen and those warning just you wait.
It's a bad
but
sign.
the latter see overtime to this game in August and the inflation reports. I think that answers your question.
We talked about it earlier. Yeah.
You know?
That the consensus has gone from, oh, it's going to be terrible inflation to now people think that we know that it's not. Can I ask you one question?
Yeah.
And I'm going to just, this is the perfect world that I wish there was some chance that it was true.
What's that?
You know how Trump always says that we're collecting money from foreign countries, and we all know that it's people that import it here.
I have an answer.
No, but my question is, let's say that there are countries that it's so important that they continue to export to us that they really have eaten the lion's share of the tariffs in their prices. So you actually could say that they're the ones that are losing out and actually paying for the tariff money that we're getting here. At least a part of that could be true. It could be 10%, could be 50%.
By the way, Goldman Sachs says it's 60%.
Think about
No, that was also including the wholesalers and the retailers as well.
and corporations.
But let me give you two answers to that question, which is...
But wouldn't it be great?
It would be great.
What a wonderful world it would be.
I'm going to give you two answers to that question. The first one is why I like my job so much. Mm-hmm. Because you know what? Tomorrow is not only PPI, I think it's tomorrow, we're going to get import prices.
Okay.
When did you ever get excited about import prices? I'm excited about it because the import prices will answer that question. If import prices are not falling...
Weren't they down last time?
They were they've been kind of flat.
Which is crazy.
It shows that they're not absorbing it overseas. If it was...
But the dollar's been weak too.
You have a currency thing. The other thing is, we have our CFO council, which is really a great group of people. One CFO said to me, I don't think we're that stupid and bad negotiators that our suppliers have 15% extra margin to absorb.
According to
Isn't that interesting?
not really, because
No?
Elizabeth Warren thinks that every single
Elizabeth
producer
Warren is not making
she thinks every single person's gouging every chance they get.
But
so.
if you said, well, you got an extra, you're already making money and you have an extra 15% I could have negotiated out, and that the world
Depends on the
market
business.
is so uncompetitive that there's an extra 15% hanging around.
What's NVIDIA's margin?
Well, that's the margin, but that's true. That's true. And we'll see. We'll take it from margin. My friend Rob is begging me to not talk anymore, maybe, as are some viewers, I'm sure. But that's the two things. We'll watch import prices tomorrow, and margins is the other key.
Steve, thank you, sir.
My pleasure.
Someone's eating these costs. By the way, Ford ate the costs. You saw it in the
No
numbers.
immaculate
Ford
taxation.
did.
Ford
There's
ate
no
it.
immaculate
But that was
taxation.
called idiosyncratic by Treasury Secretary.
29 billion,
we need that.
27 billion came from somewhere.
Coming up, folks, chip stocks remained red hot. The sector's now rebounded sharply from its April low, but will these names keep moving higher into the fall? That is the question, and yes, we've got the answer. And then later this hour, another hot sector, live sports. Boardroom co-founder and CEO Rich Kleiman's going to give us an inside look at the latest sports rights deals, the upcoming NBA and NFL seasons, and so much more. That's happening at 7:50 a.m. Eastern Time. Squawk Box coming right back after this.
Time now for today's Aflac trivia question. Who is the youngest member of the Beatles? The answer when Squawk Box returns. Plus. And now the answer to today's Aflac trivia question. Who is the youngest member of the Beatles? The answer, George Harrison.
The Commerce Department is still working out the legal details of President Trump's plan to charge a 15% export taxes. Basically, that's what it is on NVIDIA and AMD. They're sending certain semiconductors to China. The White House says similar arrangements could be applied to other companies in the future. Interesting, the semiconductor ETF SMH is at a record high, though, up nearly 25% year to date. And joining us now with more on what's driving the sector, Wolf Research Senior Analyst Chris Casso. When you saw that proposal for NVIDIA and for AMD, did you say, wow, this is great, or wow, this is not great?
Well, I guess the first thing I said is I guess it's not about national security if that's the case. But I think from NVIDIA's perspective, the potential of not shipping anything to China or shipping to China with this 15% deal is clearly a better situation for them. But it obviously calls into question what's the national security concern here. The other factor, I think, AMD was also affected by this as well. AMD's margins are lower, so it's one of the questions we have is AMD able to absorb that 15% in the same way NVIDIA has, and therefore that sort of export tax or whatever you want to call it may benefit NVIDIA more than it benefits AMD because they're in a better position from a margin standpoint.
Did you ever think that we should keep the advanced chips or any AI chips made by NVIDIA? Did you think that we should keep that from China? I'm just trying to get overall whether you figure it's going to happen one way or another. We need to win at AI, but winning doesn't necessarily mean that we do that by keeping they'll get around it somehow. So if we can profit from it and trade with them, and NVIDIA can profit from it, maybe it was always inevitable, and it's bigger than either country, and bigger than the whole concern about preeminence. It's going to happen. NVIDIA might as well sell into China, and if they are going to sell into China, it doesn't hurt to get the 15%.
Right, and the premise behind the original restrictions on the H20, what NVIDIA sells into China, is that the performance restrictions were such that what NVIDIA could sell into China was equal to what China could do domestically on their own, largely through Huawei. So the premise was that we weren't allowing China to do any more than they couldn't do on their own, but yet we would still allow U.S. companies to have revenue from there. The other factor from NVIDIA, where they have a competitive advantage around the world and also in China, is they have this proprietary software which runs in their chips called CUDA, and the Chinese developers are still dependent on that. The longer this drags out and China becomes more dependent on Huawei silicon, the less they're going to use CUDA. And that's why I think Jensen, this is important to him. His China business before the ban was only about 15% of revenue. So it was meaningful, but it wasn't going to derail his overall story. But I think you're right. China, we're not going to stop China from doing AI. They're going to figure something out some way. And having NVIDIA in there with NVIDIA's proprietary software, I think is a better situation.
How many have we talked about? Mostly NVIDIA, a little bit of AMD. The whole sector is at a new high. What else is happening? What else is that all? Is that all that's important to talk about at this point, Chris?
It's not. And AI has been the story for really the last 2 years. And the issue with semiconductors, we went through this cyclical downturn. After the pandemic, the customers built too much inventory. We shipped too much, and we've been burning that off. We're going to the third year of that downturn. We're starting to see some of the signs that that's coming to at least an end. And we upgraded Texas Instruments recently on the pullback after earnings. We think that we're kind of toward the end of that cyclical inventory correction. And TI has actually been spending very aggressively in the U.S. Part of that was influenced by the CHIPS Act and the fact that they pulled forward a lot of spending. That spending starts to come down next year. It goes down a lot in 27. They're going to convert a lot of free cash flow. So we took the opportunity on the pullback for that one. Micron's another one. They pre-announced positively earlier this week. And Micron's HBM memory that goes into AI, we kind of consider that sort of the poor man's way of playing AI, because memory is a very important ingredient in AI, and the content goes up very meaningfully in 27 on NVIDIA's product cycle, and the capacity doesn't exist for that now. So those are two. And the issue is AI has been driving the whole market, the stocks, and what we're hoping for now is we see some participation from other names in the sector.
Okay, Chris, you broadened it out. That was useful. We appreciate it. We'll see you again. Thanks.
Thank you.
Okay, coming up, why the latest company going public could be flashing a bullish signal for the markets. We'll talk about it. But first, as we head to a break, check out shares of Brinker International, ticker symbol EAT. The company beating on the top and bottom lines, driven by a 16% increase in traffic at Chili's. Shares right now trading sharply higher. We're going to talk food a little bit later. Don't go anywhere. Squawk Box returning after this. Crypto firm Bullish pricing its IPO at $37 per share. That's above the marketed range of $32 to $33. The implied market value is $5.4 billion. Now, Bullish offers crypto spot trading, margin trading, and derivative trading with a focus on institutional investors. And the company's CEO is somebody this show knows pretty well, Tom Farley. He's going to be on Squawk on the Street ahead of the first trade. Farley, of course, used to be the president of the New York Stock Exchange, a somewhat regular guest host for a while on this broadcast. I should also say they're a little bit in the media world because they own CoinDesk, which is one of the big trade publications that covers the world of crypto.
Yeah, I thought he was coming on today. His book come on with us is that we're so good to him for so long. Coming up, AI startup Perplexity making a bid for Google's Chrome browser ahead of a pending antitrust ruling. We're going to talk about the legal landscape around big tech with former Assistant Attorney General Jonathan Kaler. That's next. Squawk Box will be right back.
inside wealth.
Okay, this is a wild story, folks. AI startup Perplexity is now making an unsolicited bid, Joe. I don't know if you saw this. $34.5 billion. You like Perplexity, use it.
Yeah. Well, I don't
To
like
try
it.
to buy
I don't like it.
Google's Chrome internet browser. Now that figure, higher, by the way, almost like double
Yep.
Perplexity's current valuation.
But they got to sell it, maybe.
But the company said that several investors have agreed to back the deal. Now, this is all happening against the backdrop that the Justice Department has proposed that Google divest Chrome as part of that antitrust suit that the tech company lost last year. Now, neither Google nor Perplexity has responded to CNBC's request for comment. Of course, Google would like to keep the browser. Perplexity, by the way, whoever gets this browser, if somebody else were to, has tremendous value because once you're in it, people are just going to search and that's how it's going to be.
I know about that, yeah. Who do you think is backing Perplexity? You have any idea? I mean,
I don't, but by the way, that would be it's an easy win. If Perplexity were to get this,
right,
it'd be a huge win for
total
them.
long shot, though, isn't it?
Totally. And by the way, what they have done, Perplexity has made a couple of what I call sort of moonshot bids. So this is one. They get a lot of publicity. Here we are talking about it. They, by the way, want to buy TikTok.
Yeah.
Same kind of situation. I don't know what's really driving all of this, but it's interesting stuff.
You said I like it. I still have my main problem with AI's Gigo. In my app,
right?
I don't know if you finished it.
I haven't because it's been that difficult.
Because what they collate from Reddit and everything else is just the same drivel that you see everywhere in what I call mainstream media, which my app is. So they don't have any insight. They don't use any thinking. All they do is collate the same tired garbage in, garbage out stuff that they're finding in Reddit and other places.
Sure.
So it just comes out. It's just more of the same pablum. When are you going to finish mine? When are you going to finish mine?
Well, I have to tell you, ChatGPT 5, and I know we talked to Sam about it before, it was looking good for me for a while. It's slower than than 4 was. No question.
With the coding?
Well, the coding may be better. The vibe coding may be better, but it's still running into lots of problems. I've been trying to build something that's pretty cool that I'm hoping you're going to like when it's done, but it's not just like doing it for me. Trust me, you got to know what you're doing.
I think our app could improve all of AI. Let's bring in, joining us now with more on the legal landscape for big tech. He's probably laughing. Former Assistant Attorney General Jonathan Cantor. He is a distinguished law professor for the Washington University in St. Louis. Great school, great town, and a CNBC contributor. Welcome again, Jonathan. We usually see you on set.
It's great to be here. I'm here in beautiful Stowe, Vermont today.
Lovely.
What do you think of this? What number one is it? Is there any possibility that Perplexity could succeed here?
Yeah, there's a possibility. So the Department of Justice, as you mentioned, has requested that the court require Google to divest Chrome. This is a clever move by Perplexity because one of the things that Google is arguing in court is that one, Chrome has no value outside of Google, and two, it would be difficult, if not impossible, to divest the asset. Now, here you have Perplexity with 34 billion reasons why it has value outside of Google. And if they're willing to buy it for $34 billion, then clearly it's an asset that they can achieve or an acquisition that they could complete. The other piece that also is important here is browsers are going to be the front lines for the AI wars. And I think that's becoming clear. And right now, Google and Apple own most of the distribution points. And the focus of the antitrust case was locking up distribution points. And so the same day you have Perplexity bidding to buy Google's browser, you have Elon Musk talking about Apple locking up distribution points for OpenAI. So I think what we're seeing here is the next stage of the platform wars where Google and Apple are competing, or at least seen as bullies to some degree by the rest of the industry who want access to distribution.
Did you understand? We went back and forth yesterday with exactly what Elon Musk was accusing Apple of doing. Is he got a point, or is Apple? I mean, Apple's allowed to control how they rank. Yeah.
Yeah, it was a clunky email. I mean, it's always hard to get in the mind of Elon Musk. I think what I read between the lines is that he's saying that Apple, because it owns the distribution points, is cutting a deal with OpenAI to distribute OpenAI, exclude others, and maybe there's some funkiness going on in the App Store as a result. But I think it's really just a relative of the case that the DOJ won under our watch against Google, which was locking up distribution points on Apple, Chrome, Android, and these other platforms that are really critical to these technologies, whether it's search or an entry point for AI.
Well, let me ask you a different question, Jonathan, which is, you were fighting, I hate to say yesterday's war, but we are now moving into a place where we're talking about OpenAI constantly, Anthropic, Perplexity, etc., Gemini. It seems to me that you're right. The entry point in is still a huge value proposition. But all of the other component parts that you went after historically, the advertising side of it, how they interacted with different platforms and things, doesn't that seem to be something that, if we're talking about the world of technology a couple of years from now, is going to look very different?
Well, it depends how what happens. I mean, when we asked for divestiture of the Chrome browser, people said we were fighting yesterday's war and that browsers were no longer relevant. And now we have Perplexity bidding $34 billion because browsers are the front lines of the AI wars. I think what we see here is, do we want next generation of technologies to thrive and compete, or are we going to have the previous generation of technologies going more slowly and locking up markets? And I think that's really what this is about. But let's be clear. I mean, advertising, online advertising is still a massive business. It's still most of Google's profits. iOS is still a massive business. It's most of Apple's profits and valuation. So these businesses are huge and really important, not just for today's technologies, but for tomorrow's technologies as well.
What did you think when you saw this, just on a completely different subject? What do you think of 15% of the revenues of NVIDIA and AMD going to the U.S. government? I mean, it'd be nice it's always nice to bring in some money with the deficits we're running. Is this the way to do it?
No, it's not. I mean, we're not China, right? When you start blurring the lines between the state and the state's enterprises or the free market, we start to look a lot more like China. And so whether it's taking 15% of everyone's profits, I mean, that's just a tax, basically. But it's also nationalizing the business. Similar, I think there was like a report that Anthropic was going to offer to give Claude to the government for $1. Again, it starts to blur those lines and frankly raise lots of national security and other kinds of questions as well.
I got one for you.
Well, I won't do the whataboutism. I always get yelled at for that.
I'm going to go totally political. I want to go totally political with Jonathan.
Yep.
Okay. Ready? Because here we are making the argument that this president has gone into this sort of socialistic,
you're gonna be me on this?
Marxist world. I get it, and people have made that argument. So my question is, and you just said that I don't think you like that. What do you think of Mamdani?
I'd like you to create an app for me that is less political, Andrew. Listen, I think Mamdani is talking about issues that people care about, which is cost of living. And so setting aside whether you're for him or against him, I'm not a politician. All I'm just saying, no, my God, I mean, the fact of the matter is he's succeeding because he's talking about issues that people care about.
Jonathan, on that score, you're right. And that's why I agree that's why he's succeeding.
But that's a total cop-out. That's a total cop-out. That's exactly what Elizabeth Warren said. And you really ought to be able to be more. You're a capitalist, Jonathan. I hope.
I am a capitalist. Listen, Joe,
so that's
let me
why,
be very clear.
Jonathan, the reason I asked you the question is not whether Mamdani is I agree with you. He is turning out to be, thus far at least, a good politician. The question is whether you believe in some of the things that he is articulating as part of his policy positions, namely the idea of socialism, namely the idea of freezing rent, giving out products and other things like food for free, things like that. So do you, as somebody who's talked about capitalism and such, look at somebody like him versus maybe somebody like Cuomo, and Cuomo has his own problems. Let's be very clear about that. How do you look at that? I know you're not living in New York right now. But nonetheless.
Yeah, I'm also I'm also not a politician, but I'm a capitalist, and so I don't agree with everything he says and everything he stands for. But I think he's talking about issues that resonate, and I think to the extent that any politician, whether it's Donald Trump, who has done this effectively as well, or Mamdani, to the extent they're talking about issues that affect people's cost of living, they're more likely to get traction. And that's really what's happening here. And how you solve these problems is a good debate that we should be having. But I think a lot of the typical cop-out from Democrats in the past was to try to find safe issues without really talking about the economy. And I think we have to do that now.
Yeah, I guess the point I was making about, the state-sponsored capitalism, in the CHIPS Act, when you mandate, child care coverage, union wages, ESG, DEI, both sides do it. And I it's whataboutism, but there's whataboutism and there's hypocrisy. And that was a mess, a lot of the stuff that was in the Biden administration's
that's
legislation
right.
too. I'd almost rather get the 15% from NVIDIA than do all this feel-good stuff that it just ends up hurting the people that
So you're in favor, Joe, it sounds like you're in favor of a 15% chip tax.
15% tip tax. You mean
tax.
We shouldn't have gotten rid of the tax on tips? I mean, I'm not...
No, chip tax.
Oh,
chip tax.
No, I'm not saying that. I'm just saying that, a lot of finger-pointing from people about, state-sponsored or industrial policy, and the masters of that were the Biden administration, and now suddenly everybody's found religion.
Yeah, listen, I think we can get into the whataboutism, but I will say there's a little bit of a difference when the government is giving incentives for somebody to do something versus simply saying, if you're going to do business with somebody else, I need my taste. And there's a difference there, I think, fairly.
Well, I'm sure I can find some examples of things that were other than incentives that really helped. I bet. Jonathan, thank you. Sparkbox going to write that.
to learn more.
Shares of Cava tumbling after the Mediterranean restaurant chain missing estimates on weaker sales growth, also lowering its forecast for the full year same-store sales. Now, we're going to talk to the company's CEO, Brett Schulman, about the quarter and beyond. We're going to do that in the next hour and give this man credit for coming on the air when his stock is falling 25% at this point in the pre-market, so we can try to understand what's happening and where it all goes in the future. We're going to have that conversation with him in just a little bit. But up next, though, we're going to talk about sports, America's love affair with live sports in particular. That is just one of the many topics we're going to dive into with the one and only Boardroom co-founder and CEO, Rich Kleiman, when he joins us right here at the table when Squawk returns. Coming in hot right now. Sports broadcasting rights getting a huge shakeup this week with ESPN and Fox announcing they are teaming up to create a single streaming service. Also, Paramount now striking a $7.7 billion rights deal with the UFC. Lots going on in sports and live sports in particular. Here to talk about that and so much more, Rich Kleiman is Boardroom's co-founder and CEO. Good morning to you, sir.
Good morning, guys.
We've got a big event coming up in September, which we'll promote.
Yes, we do.
And talk about in just a little bit. But let's talk about all of these rights deals, because it just seems like every other day there's a new deal and all the big networks are trying to get in on the action. What do you make of the NFL Red Zone deal and ESPN to begin with?
I actually really thought it was a great deal. I was pretty impressed by the structure of it. It felt like an NBA trade, to be honest with you. I think at some point there's going to be like a Shams, like a Wojnarowski or something of reporting on all of these media deals because of just how like unique they are and how much kind of change there is in the landscape. But I think the idea that the NFL, I think, did not necessarily want to keep managing NFL TV or the NFL Network. And the idea that ESPN now can manage the NFL Network, can take on Red Zone. I think it was very cool that ESPN has the potential to take the Red Zone brand and scale that a bit. And I think the fact that the NFL was able to retain NFL Films and NFL.com, two properties that are probably best served with them overseeing, really was a great win-win deal for everyone, and honestly a win for fans. And I think the only thing that is important in deals like this, and I've said this when I spoke to Jimmy, is the storytelling around exactly what this all means, so the consumer can take advantage of just how unique these are.
Okay, so the one question though, and it won't come up for a long time, but the next time NFL rights come up for grabs, and ESPN is a bidder,
Yeah.
and so is Google and Amazon, everybody else bidding for whatever that one package is. If you're the NFL, or I should say, yes, if you're the NFL, are you going to sit there and say, ESPN bid a little bit lower actually on a cash basis than whoever so-and-so is, but you know what, we own 10% of them now. So we should probably do that.
Yeah, I don't think so. I think these are two like formidable organizations that understand the business on both sides of it. And in reality, like the NFL has done a great job of creating moments that they can sell, whether it's the Christmas Day game to Netflix, Thursday night game to Amazon. I think the games that they're bringing international obviously bring a whole new opportunity. And ESPN's had a relationship with the NFL for a long time, and they'll continue to. They get more games out of this deal with the NFL. And listen, I think NFL is going to have to do what's best for its owners and its organization, and the rights deals will continue to go up. And the tech companies, when this deal is up, will obviously come into play, which will raise prices. But I think the uniqueness of what these leagues are doing now in creating these packages and being able to create moments, which is important because when you see how long an NBA season is, for instance, having an NBA Cup in the middle of the season is a way to create some stakes and some excitement around something because the season is long and everything is accessible to us now. That's taken down some of the value in what used to be like a national TV game.
Okay, what do you think of this big UFC deal with Paramount?
I thought it was great. I thought it was
and by the way,
amazing.
people thought they were going to split that up to get anything close to that number.
Yeah. Well, I think, you know, Paramount in this new merger came out with a bang, and I think they did a great deal. And I think the fact that the UFC can use the broadcast distribution at CBS now is a big plus for this deal. And I thought it was amazing that on almost the same week that TKO announced their deal with Paramount, they were taking the UFC from ESPN to Paramount, but then the WWE went over to ESPN. I think it's amazing, all this transacting. It's exciting. I think the deal ultimately, it's going to be a more efficient, more friendly user experience for a UFC fan, this Paramount deal. And I think the idea that they'll get CBS and the broadcast distribution.
Am I supposed to, WWE at ESPN, is that not odd to anyone? Is it a sport?
It's entertainment. I saw a quote
ESPN is sports and entertainment.
Yes, but I saw a quote Mark Shapiro had in the press release that we're putting the E in ESPN, and it is entertainment, and there is a sport element to it. I mean, Joe, get on board, man. You got to get on board.
I can't. Since I was 8 years old and liked it. Ever since then,
So you were on board?
Yeah, until I was 9 and I realized it's all just choreography.
Oh no, I've been on board.
You're watching wrestling?
Don't tell everyone. I did back in the day. I don't watch it that much
Did
now.
Santa bring you
I love Randy Macho Man Savage. I did.
Guys, we're dating
I know.
ourselves. The WWE.
I know.
You bit on Michael Jackson's
The
glove.
Iron
These are
Sheik.
things that
The
you...
Iron Sheik.
Michael Jackson. Joe, what are we talking about?
He bit on Michael Jackson's glove.
A long time ago. I
right.
did. I don't. Now we're going
What do you
into
think
a whole
of-
different
what do you
version
think
of
of
culture.
What are we talking about?
Being young and gullible.
Got it. Okay.
I mean, that's
listen.
okay.
I think we'll just.
I mean,
answer the
UFC
question.
I get. UFC I get. And
Absolutely.
especially if they got a fight right outside the White House.
Listen, ESPN airs documentaries, ESPN airs movies and the 30 for 30 series. Whether you see the WWE as entertainment or a sport or a combination of both, it's a great deal for the network.
Okay, what do you think of
It is.
Sport.
Entertainment.
Okay, give me the lowdown. I mean, it's old now, but the NBA deal and Peacock and NBC, how you think that's all going to work itself out with the prospect that Peacock, which by the way is owned by the parent company of this network, at least currently, by the way,
Yes,
this network
we
because it
know.
got spun off, as you know.
Yes.
The betting line is that ultimately Peacock is going to get merged up with one of these other players. Maybe Paramount, maybe it's with David Zaslav's, Warner Brothers,
Wow, wouldn't that be interesting?
right?
If the
After
NBA
having lost it,
somehow-
right?
yeah.
So what is that? How do you think the NBA is ultimately going to think about where it lands? Because it may not land where it thought it landed just a year ago, long term.
Well, but they got the deal done.
No, they got the deal done. I'm just saying, I would bet by the time that deal is over, that Peacock will be part of something else.
Got it. I would say to you that I would imagine that Adam and the league in doing these deals understood the future potential of what could happen down the road. He was able to get a great deal and diversify the distribution of the games. What I'm most excited about is the idea that I think NBC and Amazon can bring the NBA to life in a different way than ESPN has. Not to say that I haven't enjoyed ESPN's coverage of the NBA and TNT's coverage, but I think when you see the NBC hiring Carmelo Anthony and Tracy McGrady, this is a unique opportunity to start telling stories around the game and bringing the game to life in an interesting way. Now, that being said, if it ends up merging into Paramount and CBS, I would imagine Adam has gotten ahead of that already and understands that. But I don't necessarily see that as an issue. I think ultimately if the games are being distributed to fans in multiple places and moments are being created, that the fan will be fine. And I'm sure the economics and the deal is not something that Adam is not going to let be beneficial for the league.
You picking the Savannah Bananas for a wild card spot in the Major League
But I
Baseball?
would imagine the Savannah Bananas are ultimately going to get a pretty big media deal themselves.
Is that and that's entertainment though?
The E in ESPN, my friend.
God, you're like
He knows what he's doing.
You know, when we have real estate people on, prices are always going up and interest rates have always gone. They are always on. This is like you're always on message, are you not?
I'm not always on message. No.
Okay, so
I'm always on point.
Hold on. Have we talked to you, by the way, since the big trade?
Which big trade? Oh, KD's trade?
Yes.
Sorry, that was July, man.
I know.
That was June.
I don't think I've seen you since then.
Well, what do you have to say?
How did it happen?
It happened because we worked collaboratively with his old team, and Kevin got where he wanted to be. And I think that ultimately this was a win for us, and I hope the Suns feel good about moving on. But Houston's going to be a force this year. Listen, I don't want to put too much expectation. This is a new situation, but they've got an incredible coach, great ownership. They've got a great young team. Remember, last year they were the #2 seed in the West with a very young team. And they're adding one of the greatest players of all time who feels as good physically as he ever has. And I think we're all very excited. But at the same time, you got to go into the season. You've got to gel. Chemistry has to work. But I think we've got great things ahead. And I think opening night in Oklahoma City, the NBA was really getting wild with that one. But we'll do it. We'll take it.
playing Harlem Globetrotters, are they?
Now they're going to play the Oklahoma City Thunder.
This is the same theme that I'm keeping.
Entertainment.
Forget it, Rich. I see that.
Okay, folks, talking about entertainment, we should mention that Rich and KD
Yes. And you.
and myself, we're all going to be in Los Angeles, as we hope that you will be, because we've got a big event going on, Boardroom's Game Plan event with CNBC. We do it together. September 16th, we got a huge lineup of athletes, owners, investors, innovators, and it's a wild time each year, and it'll be even wilder this one. Please join us. You can register right now if you want. You go to cbcevents.com/gameplan.
Yes.
All right, it's 8 a.m. Past 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Andrew Ross Sorkin and Rich Kleiman. Among today's... You're still here, right?
Am I still here?
He's still here?
The seat is empty.
Just for the
He's out. Hang out with us.
And Steve Leisman. Among today's top stories, he's just sitting down. White House says it's planning and hoping to keep publishing monthly job reports. President Trump's nominee to lead the Bureau of Labor suggested a suspension in an interview earlier this month. Elsewhere, Treasury Secretary Scott Bessent proposing the possibility of a 50 basis point rate cut at next month's Federal Reserve meeting. He highlighted downwardly revised jobs growth data for May and June that came in 2 days after the Fed had opted to keep rates steady. The last meeting we're going to be speaking to counsel to Secretary Bessent, Joe Lavorgna, in just a bit. And Apple is pushing back on Elon Musk's claim of favoritism towards OpenAI, saying in a statement to CNBC that the App Store is designed to be fair and free of bias. The company adds that its charts, recommendations, and curated lists are based on objective criteria with the goal of safe app discovery for users and visibility for developers.
I want to get over to Steve Leisman, who's at the table. He's got a bit of news on the list of possible Fed picks. What do you got for us?
Good morning, Andrew. CNBC has learned the Trump administration currently considering now 11 individuals, including 3 names that have previously not been disclosed, to replace Fed Chair Jay Powell when his term expires in May. According to 2 administration officials, the 3 new names include Jefferies Chief Market Strategist David Zervos, former Fed Governor Larry Lindsey, and Rick Reeder, who is Chief Investment Officer for Fixed Income at BlackRock. I don't think we have a graphic on that. But anyway, they now join a list of 8 other candidates that CNBC has confirmed are under consideration, including Fed Vice Chair for Supervision Mickey Bowman, Fed Governor Chris Waller, and Fed Vice Chair Philip Jefferson. Add to that NEC Director Kevin Hassett and former Fed Governor Kevin Warsh, mentioned by the president right here on Squawk Box. The officials described, quote, a deliberative process now taking place where Treasury Secretary Scott Bessent will interview each of these candidates, winnow down a list, and then pass it along to the president for a final decision. The size of the list and the process described suggests a decision not imminent that could take a considerable amount of time, but the officials would not offer a timetable. The longer the process takes, though, the less likely there is to be a so-called shadow Fed chair in place approved by the Senate before Powell departs. Though sharply critical on an almost daily basis of Powell, President Trump has recently backed off suggestions he might replace the Fed chair before the end of his term. While many candidates on this list have advocated reform at the Fed, most have supported its independence, and they would appear to be a list of people with considerable either monetary policy, market, financial, or regulatory experience. Most of them also have advocated for rate cuts.
I mean, this could be a fabulous reality show at this point.
Pretty
I mean, we
interesting.
now have 11 people.
And you
all
didn't mention
battling it
Bullard
out.
either.
What's that?
You didn't mention Bullard.
Did I leave Bullard off the
Well,
list?
Bullard's on the list.
I don't think I named everybody, Joe. I just
but-
thought it was
But
it
Rick
was
Reeder,
for time.
Rick Reeder,
Larry
by the way, friend of the show, we've had him on.
Yeah, you read Larry Lindsey's stuff. He's brilliant. He's
Larry's
very
so
smart.
what do you think is really happening here?
I mean, in
You're
the
fired.
first, what's that?
You're fired.
You're fired.
You're fired.
In the
The
first,
apprentice.
in the first instance, I think that the administration and especially Scott Bessent understand it's very important to come forward with a candidate that has the confidence of markets. You do not want to freak out the markets with this pick. This is there's no gain from that, and there's possible gain doing it the other way. So you look at this list and you say, okay, I mean, I can name somebody. I think the only question the market has is, does the president appoint somebody that is more loyal to the administration than to the institutional goals and aims of the Federal Reserve?
Okay, so
that's where the market might get freaked.
So
There are
here's
some
my
on
question.
there.
We've had this discussion many
Yeah.
times about whether there's actually a shadow Fed chair already in place.
Right.
We don't know their name, but the shadow Fed chair is there. We know that whoever that person is, at least we thought, was going to have to pass some kind of loyalty test where they were going to invariably lower interest rates if they were going to get that gig, right? Like that was the idea. The question is actually whether this throws some of that in doubt, because some of the folks on this list appear to be a little bit, I don't want to say more independent, but maybe willing to do their own thing if they were to get the gig.
Yeah. I think, Joe, work with me on this. This is interesting to me, and you too, Andrew. Okay. The Federal Reserve Act allows the president to nominate this person. Okay? So there is clearly some scope within the act for the president to nominate somebody on their side. Right? It's not like there's an independent commission that comes up with the candidates and picks it. The president picks it.
Right.
So what do you want? You want somebody who will embrace your vision of your policy and the economy. Michelle Bowman, I think, was really interesting in her speech over the weekend. I didn't get a chance to report this, but if you go and read it, she says not only are tariffs not going to be inflationary, but she says nice things about other parts of the policy. Bernanke was inside the Bush White House as, I think it was CEA chair, before he became Fed chair. So there's got to be this sort of simpatico idea of your policies, Mr. President, are ones that I think will lead to lower inflation and higher growth. And a presumption of that. Part of the friction between Powell and Trump right now, Powell does not embrace that assumption.
Right.
He doesn't say, tax cuts will lead to better growth, which will lead to higher growth without inflation. He doesn't embrace the idea for sure right now that tariffs will be a one-time price increase. He said it 3 times at the press conference, but that's not his operating principle here.
Right.
You get a Fed chair, they're going to come in and say, I embrace this.
But you would want someone, you wouldn't want...
Me personally, or you generally?
You wouldn't want G. William Miller to be, just because he'd screw everything up and keep rates low. But you know who appointed Volcker in the first place?
It was Carter.
JC.
Yeah.
And then Reagan reappointed it.
Right.
So you could say that one of the greatest things. But Volcker was one of the great. But look what he did to Carter's economy.
But you are talking about something that I have been almost alone in advocating in this idea. How much help Powell is giving to Trump.
Right.
Right.
And he won't recognize it, but my contention is this, that Powell, by holding a hard line on the potential inflation from tariffs,
Right.
is keeping inflation expectations under control and perhaps staunching this idea of tariff inflation moving over into broader inflation.
Even more so if there is a slowdown generated by any of Trump's, take your pick, for the people that hate his policy, he's got a fall guy too.
Well, that's what the Fed is there for. This is not new. Nobody's smarter than Trump in understanding this, but the Fed is there to be blamed.
So it hasn't happened yet. I went to Polymarket. I'm going to Kalshi as well.
Do you have a...
I'm trying to see if these new names have been added yet.
Who's in the lead right now?
Well, it seems to me, hold on, I want to make sure I'm getting the right thing going here. But it seems to me, and you tell me, that the Kevins, if you will,
It had been worse.
had been at the height of all of this. Now, not so
Yeah.
much. I'm trying to actually find it.
You don't know who the top
I'm
person-
not. It's not coming up the way I'm searching for it. But what is your sense? We heard about the Kevins last week. Kevin Hassett, Kevin
Yeah,
Walsh.
if it was going to be one of them, you wouldn't need 8 more people.
Are they off the list
So
now?
I want to pick up on what Joe just said. Joe's idea, and then I'm reading into what you're saying. The idea was maybe they weren't satisfied with that.
Exactly.
And the president wanted a bigger list
Yeah.
and said, give me more candidates. I have to think, although I cannot say this from the officials I talked to, that the process of the wider list is driven by the president. Right?
You would think.
Scott is not freelancing on this thing, I would not think. Just one more thing, guys, if you would. I think we may have a graphic on this. You know that the Treasury Secretary, I believe, was overnight on another show, talked about a 50. There is a modest, small bid of a 50 in the futures market this morning. It's not big. It's a 2.7% probability versus a 97% for a 25. But it's the first time we've really seen it show up in the Fed funds.
And just to answer your question, because I did not find it. So Waller,
There we go, right there.
by the way,
73.
I don't know if you believe
Right.
whoever's betting on this. Waller now at 33%, Hassett at 22%, Warsh at 15%, your guy David Zervos 9%, Bullard at 6%, Stephen Mirren at 6%. Shelton, they're not giving any credit to yet. They actually,
Mirror's not on the list.
I know.
Shelton's not-
They
but that's
put
important,
Besson on.
right?
They put Besson on at
Myron,
3%. They
Myron.
put Bowman on at 3%.
If they could put the wall back up before we go, guys, the person with the most experience in monetary policy is Waller. Waller, in terms of contemporary, followed by Bullard. If you want a guy who's an expert, right now, Waller is sort of maybe not quite that level. Stan Fisher or Richard Clarendon, they were Fed vice chairs. Waller is that guy with the most monetary policy experience.
What's the blue?
The blue are the new guys.
The new guys.
Well, Logan's new.
Huh? No, the blue is Logan's not new.
Not
Reader,
in
Lindsay,
terms of being on the list. I hadn't heard. I hadn't heard.
Lord
I
Logan?
hadn't heard. No, I know, but I hadn't heard you as among the.
I just want to pitch, Mr. President, if you're watching the show, I think we would like to do a reality show in prime time right here on the network. We're just following the
You can
almost
say that,
apprentice-like thing. I would watch that show. I would watch that
You don't
show.
want to get a one.
The economist geeks.
You don't want an
11.
11.
Some of us think the process is too important to actually be a reality television show.
By the way, on that front, I agree with you. Okay.
Some still have reverence for certain things.
Coming up, Kava stock is down a lot, plummeting. Revenue missed the mark. Also, same-store sales weren't as good as people were hoping. Brett Schulman is the CEO. He's going to join us next. Then, Counselor, the Treasury Secretary Besant Joe Lavorgna is going to join us to talk about all these things. Squawk Box will be right back.
Washboardjim.com.
Beautiful shot, though, of a gray, was it gray kind of cloudy Washington, D.C. this morning, but a nice shot of the Capitol. Cava shares down lower this morning after the fast casual chain reported second quarter revenue and same-store sales that missed estimates. The company also trimming its sales outlook for the year as it tries to top last year's very strong numbers when it added grilled steak to the menu. And joining us right now is Brett Schulman. He is the company's CEO. And a bit of a brave soul. I give you lots of credit to come on TV on a morning like this and not to overplay it or downplay it, but the stock is off nearly a quarter this morning, about 25%, 24, a little over 24% right now. So before we begin, how are you feeling?
I feel good. I feel
this is not throwing you for a loop?
Listen, even before our IPO, I told the team, stocks will go up, stocks will go down. But what really will define us is how we build this over the long term. We're not doing this for the next 10 weeks. We're doing this for the next 10 years and beyond. And so we're focused on that. And when you look at some of the metrics in the quarter, we beat our EBITDA, we beat our EPS, and our new restaurants in 2025 are trending at record level openings at $3 million plus run rates. So we're more confident than ever in the large scale white space opportunity defining the metrics.
And so what do you think's happening? I mean, I think the investor class is saying, we expected you to continue to beat. We thought the forecast was going to be up and to the right, and it is not that way.
Well, markets can be short-term focused and very focused on same restaurant sales, which we did come in under expectations. And so
when did you start to see that happening?
So we did enter the quarter on our run rates as we expected. And then in June, we saw a pretty pronounced deceleration. But that also coincided with our year-over-year lap of our steak launch last year, which was our most significant protein launch in a number of years. And as we started to work through the quarter, we started to regain momentum and re-accelerated comps at the end of the quarter.
Okay, so what are you seeing though? What do you think? What is the issue in your mind right now?
I think for us specifically, we are comping significant hurdles. If you think about on a 3-year basis, we grew traffic in the quarter 20%. Our AUVs have gone from 2.3 to 3 million during that period. So certainly high hurdles. And then I think there is macroeconomic uncertainty. I like to use the metaphor, it's like consumer trying to navigate through the fog. The fog has gotten denser at moments. It's gotten lighter when they pass the budget. I think that gave consumers certainty, whether you liked what was in the bill or not, at least gave you clarity. And then now we've got some shifting tariff policy that creates fog again. So we're just trying to focus on delivering a great value to our guests when they're feeling that fog of pressure.
So tell me what you're feeling on the labor front and what you're feeling on the product front, meaning the food and other wholesale stuff that's coming in that you need to actually buy to make the food for folks.
We haven't seen inflationary pressures to date. Got to give a shout out to our supply chain team. They've been incredibly agile, really mitigating any cost pressures to pass through to our guests. Remains to be seen what's going to happen at the end of the year, but no pressure on the labor front either.
Okay, but hold on. So on supplies, you're saying no, there's no pressure.
Now, when you put the puts and takes together, and again, that's our job, that's our responsibility to try and work on behalf of our guests to mitigate any of those inflationary pressures we may be seeing by offsetting it with other efficiencies in the business.
Okay, so tell me how you're doing that. Because by the way, that is the central issue for so many businesses that are bringing in goods from outside the country. So first of all, what goods are you bringing in?
Yeah, so our olive oil from Greece.
Right.
We do get some hormone antibiotic-free beef from Australia, and then some basmati rice from overseas. So the rice crop was great this year, so that helped offset any tariff pressure on that front. And then when you think about how we've architected our supply chain over the years, we do source a lot domestically. We are a domestic manufacturer. We have our 2 production facilities where we're vertically integrated to make our dips and spreads, which also helps pass that cost effectiveness and efficiency to our guests.
When you think about the rice, when you think about the olive oil, is it possible over the next year or two that you think you could be sourcing that domestically?
With the specificity of the ingredients.
That's the problem.
Yeah. There's some of it. I mean, there's certainly things we can shift domestically. There's others that we're going to source overseas, and then we're going to work to make sure that we don't have to pass those costs along to our guests.
What are you seeing? So, okay, and that's the other question. Are you eating the costs?
No. If you look, we beat on restaurant level margin. We had 26.3% restaurant level margin while absorbing any of those pressures around us.
Okay, what are you seeing in terms of the strength of the consumer to the extent that you think you're a barometer of what's going on? Are they trading down? Are they trading up? What's happening?
Yes, I think relative to our peers, we put up a positive comp when you've seen a lot of people put up negative comps. So clearly when people are choosing to eat out, they're choosing to eat out at Cava. So we're very excited about what we've seen, and again, the long-term trajectory of the business and the structural strength we see underneath.
Okay, can I just ask you
Yeah.
almost like a philosophical, psychological question?
Yeah.
So you introduced steak a year ago.
Yeah.
You know that that's working in a big way.
Yep.
I imagine you say to yourself, this is working, but this is actually a problem for me. Insofar as you say to yourself, talk about the hurdle, like this is going to be a tough comp.
Yeah.
When did you say to yourself in the past 12 months, we're going to get to a point where maybe this is going to be tough? And and when you're thinking that to yourself, are you also looking at the stock and saying, you know, I wish it wasn't actually so high?
Yeah, that's the perverse nature sometimes of the public markets where, you know, you have to comp the comp, so to speak. And, you know, we could have done that. And we're going to launch chicken shawarma here in the first week of September, which is going to be another new protein launch. We could have accelerated that and launched it in June to match up with our steak launch of last year, but we didn't think that was the right thing to do for our operations team or for the business. And again, we've tried to position this business for the long term, very strong balance sheet, free cash flow positive, self-funding 18% plus unit growth, so that we don't get unduly influenced by short-term decisions that the market puts pressure on, and we can stay steadfast on that long-term strategy and build the next large-scale cultural cuisine category.
Thank you for coming in, and thank you again for coming in on what is a tough morning, but we do hope you come on back, and we'd love to follow your progress.
Yeah, thanks for having me.
Very tough. You brought food last time when I wasn't here.
You weren't here. He brought food. He was trying to buy you off last time. This time he decided he didn't even need to buy anybody off. He's like the numbers aren't.
No, I know. That is a tough. Yeah. All right. Next time. Still to come, Counselor, the Treasury Secretary Scott Bessent, Joe Livornia on the economy, trade discussions, and more. And as we head to break, here's a look at the pre-market winners and losers on the NASDAQ. Coming right back. Treasury Secretary Scott Bessent suggesting overnight that the Fed should be open to cutting rates by 50 basis points at its next meeting in September. For more on rates, inflation, the economy, the latest trade developments, let's bring in Joe Lavorgna, counselor to Treasury Secretary Scott Bessent. When did that happen?
What's that?
So you have an official capacity now. Can you speak freely?
Yes, of course. Always have, Joe.
Kind of, but I don't know if you can speak totally freely. Okay, for example, the 15% export tax on NVIDIA. You're a free market guy, conservative. Doesn't that sort of rub you the wrong way?
President Trump is trying to protect U.S. business and industry. We're in negotiations with China. We'll have to see how things play out, but I don't want to specifically comment on
two specific companies.
One company.
Two specific companies pay 15% of their revenue to the federal government in a specific industry.
This is, Joe, a very complicated issue with trade.
But I understand that.
So you can't. Okay, let's be fair. You have to. This is a very specific issue on trade, and there's a lot of national security concerns at play. So
well, apparently not. If you pay 15%,
there's a lot there to unpack.
Can I just throw one other thing in it? In apparently, your boss this morning, I don't know if you just saw this, because the headline's just crossing, where Scott Bessent said that the NVIDIA chip export tax could be a model for others, for other industries.
At least it'd be not a single one-off situation then.
So that would be the upside.
That's what I'm saying. Yeah.
The downside version of it was people would say, my God,
industrial policy.
This is true industrial policy. If we're now saying this is not just a one-off.
I just want to as the Secretary said many times, and this is important, national security is economic security is national security. So I think we need to just step back and take a more holistic, integrated, detailed approach.
If the BLS numbers were rigged, and in fact it wasn't a weak number, then why would Secretary Bessent be saying we need a 50 basis point cut? They're either rigged or they're not.
No, that's not true. So I think the thing is, the Secretary and the President want a more rigorous quantitative set of standards for the data. And there's no question that when you have a Six Sigma event in the last month of the revisions, there's concerns about data quality. In the private sector, you talk to many analysts, and they're always sort of circumspect on the payroll data, given the propensity for massive revisions.
I think it's terrible data and antiquated, but I'm just saying I don't think that the BLS commissioner rigged the data to make the president look bad.
Well, I understand that, but
you think it was rigged?
Well, here's the thing, Joe. If you look at the pattern of revisions, you've had consistent downward revisions for the last couple of 3 years, except for a brief period last fall, we had upward revisions. Then you have a multi-sigma deviation in the last couple of months. People start to question the integrity of the data.
Yeah, but
so
the big 800,000 revision was before the election.
No, but it wasn't. And it got revised up over the following months. No, the data got revised up in October, November. Anyway, the point is we do need good data. The trend in payroll growth has slowed, and this is what is important. This is what the Secretary was alluding to, is that interest rates by the Fed's own standards are well above neutral. They're well above even the highest dot on the histogram in terms of rates. And if you look at what's
Jeremy Siegel wants to use Fed funds versus where the 10-year is.
Sensitive sectors of the economy are the weakest, and certainly would warrant lower interest rates.
I was bolstering your point. He wants to use where Fed funds are versus where the 10-year or the 30-year is. We're sharply.
Well, not just that. The market has been saying for 3 years that monetary policy is too tight because the 10-year has been trading below the Fed funds target, the upper end of the target. So I can understand the president's frustration.
I'm going to go a different direction on you. I want to go back to BLS for just half a second, which is the new, or at least nominated BLS director, says that he is cool with the quarterly figures. He's just not cool with the monthly figures. Now, by the way, that actually makes sense to me, which is to say that, the quarterly numbers hopefully are right because they've had time to catch up. The monthly figures seem to clearly be inaccurate. I don't know if they're politically motivated inaccurate, but that's the point. If the quarterly numbers are cool, and we can, I think, agree that we could maybe modernize the system so we're not getting this sort of crazy lags but it suggests that the numbers ultimately are not being politically manipulated. Do you agree?
The key point, Andrew, is that people want to have confidence in the numbers, and just the pattern of revisions and the magnitude of revisions makes people, just from a statistical standpoint, wonder about the integrity of the data, whether it's a major mismeasurement issue. And certainly the BLS, I think, historically has been slow in sort of adopting new technologies and techniques to try to better measure the economy. That's something EJ, I think, would be very good at trying to have a more structured
approach. The EJ
approach.
question. You know, there's a question about the credibility of the numbers because of these delays, which I think is a technology problem, maybe incentive problem, and other things about how it's collected. What you don't want is the numbers to be politicized, polarized, and whatnot. EJ's history is such that he's obviously part of the Heritage Group, Project 2025. So for some people in the country, they're going to look at that and think about it in a sort of political prism, which is something you don't want. But there's another issue, which is the issue of expertise. And maybe we decided that expertise is out the window, but his history is not as somebody who has done polling and research and things of that sort.
No, but EJ, with a PhD in economics, understands statistics. And the data ultimately, if the data don't get revised as much and they're more accurate and match GDP, that's all the commissioner, that's all EJ would want. So what his background is has no bearing on the competency of how good a job
And he's not
doing.
going to
The numbers will. The
You
numbers
know,
will bear that
they
out.
say the commissioner
Right.
doesn't do anything anyway, he just oversees
But that may be the problem, Joe. And then
Right.
you need
Let me
somebody
ask
to
you
make
this.
a real effort and try to get better,
So
better quality data.
There's a lot of pressure for lower rates, obviously, and now we are hearing that the list of potential replacements for Jay Powell is expanding. So
11 people. Leisman just broke some news of the 3 new names.
Exactly. The worry is that the president is a real estate guy and wants lower rates so much that he's going to put someone in that maybe is too dovish. And I made the point that Jimmy Carter, do you think Jimmy Carter liked G. William Miller or did he like Volcker? Volcker turned into the hero demigod of all time because he basically went to 21.5% interest rates and crushed the economy. G. William Miller would have given the President Trump everything he wants.
I don't know about that, Joe. But
well, he's the clown prince.
But back then, you had interest rates or 10-year notes.
The president,
15.
well, the president lets someone do what needs to be done for inflation.
But we've just established that the market
in
rates
the future
are below.
Okay, in the future.
But the market's forward-looking, and long-term rates are well below the funds rate.
Right.
And again, by the Fed's own admission, monetary policy is extremely
in
tight.
the J.D. Vance administration, starting in 29.
But this is a hypothetical several years from now.
I was throwing you a bone there, my friend.
No, but my point is that the Fed's models have been broken. The Fed's inflation forecasts have been off. That's just.
So you think the president would be okay if someone said, "Look, I'm worried about inflation for whatever reason. We need to tighten rates." You think he'd be okay with that? He wouldn't fire him.
Yes, absolutely. No, well, the president has said that rates should come down. And if there's a mistake, then the Fed could reverse. And if you look at interest-sensitive parts of the economy, housing, autos, areas of manufacturing, they've been soft. And certainly lower rates would help. And by the way, the president, who was mocked at the time back in 2018 about lower rates, turned out to be exactly correct.
Probably right this time, too.
And the economy grew 3.4%, almost 3.5% in 19, and inflation was low and falling.
But all the pressure maybe caused the Fed to be unable to cut rates. It could have been.
Well, if the Fed, Joe, if the Fed is data dependent,
how could Powell cut at the last meeting with all the pressure from the president?
Because I can tell you why. If you look at the Fed's forecast and headline inflation in March, they forecasted 2.7. It came out at 2.5. In June, they went from 2.7 to 3.0. Headline inflation went from 2.5 to 2.4. Their forecast error actually got wider. And by the way, Governors Waller and Bowman dissented for rate cuts at July.
First time in 50 years or so.
30 years.
I got a complicated.
50,
I got a hard one for you. Do you think that Jan Hatzius should be fired from his role at Goldman Sachs? Because that's effectively what the president of the United States, who is your boss, suggested yesterday on Truth Social.
I think he should, because he never comes on this show. He doesn't come on this show.
Executives should be do. That's their own prerogative, so I'll leave it there.
Well, but how do you feel? Actually, but here's a separate question, because I think business executives watch our broadcast and they think to themselves, and I think this is probably true of David Solomon, actually. He says to himself, I like some of the president's policies. I don't like some of the other policies, but what I really don't like is the president coming after me personally, telling me I should go be a DJ permanently, or that I should fire my economist. And I think that one of the things that's sort of in that thought process is, you know, if you say you're going to support American business, especially with, you know, foreign countries and other companies that are competing against us, don't go after our own people. What do you think of that?
The president is incredibly non-conventional and highly effective. And people know when he's sort of, you know, trolling and being
this is
that's about it.
This is crying about the mean tweets 2.0. You're still
all I'm saying is, if you are an executive and your name is mentioned in one of these things, you don't think that he's just razzing you.
I wouldn't like
You
it.
think it is not a good situation.
But
I think that's what it is.
mean tweet. We're back to mean tweets.
Yeah, I mean, look, the thing, Andrew, I would say is...
By the way, he's giving us a lot to talk about on this broadcast, so Mr. President, thank you.
I don't want to mean...
But
that's my point.
You might get one.
I might get one.
I might have gotten one. The president has been so accurate and so visionary on so many things in terms of getting foreign capital to come back, how the tariffs have played out. I mean, he's really been correct time and time again, and you're seeing it. The economy rebounded in the second quarter. Growth in the third quarter looks good. Growth will be even better if rates are aligned with the fundamentals. Inflation's falling. I mean, all these good things that the president has put in place, people need to be mindful of. You're seeing very tight credit spreads. There's low recession risk. So there's a lot of good stuff.
I have to tell you, he's a very good spokesman for this president.
Oh, it's very kind of you.
I think what I said right at the top, he definitely is a different Joe Livornia now. And that's okay.
It's hard to improve on perfection. Let me make a comment I missed.
But once you do join the administration, I mean, I would not...
Joe, but these are the things that, you know,
you wouldn't join it if you didn't believe in most of it.
All of it. All of it. I mean, look, the president is extraordinarily results-oriented.
I know.
You're seeing very solid results, whether you like him or not.
I argue all the time that don't take him literally, you know, take him serious. I'd say that, and I also acknowledge that there's times I'm like, I can't defend everything, but I can, you know, you can't throw out the good for waiting for the perfect. But when you're in the administration, you better say everything's perfect, or you're not going to be.
I think we take a very honest approach to things.
What do you think? You don't like those mean tweets?
No, I think you can look. I think there's lots of policies that have actually worked out a lot better than a lot of people thought, including myself, by the way. And I think the good part is
we could go back to his first term to talk about mean tweets.
Yes.
We can't.
Joe, we want to thank you for coming in this morning. We always enjoy talking to you.
You've got to get used to it. You got to be like a cat that, you know, every time, sooner or later, they don't react.
We have fun talking about all this. We do. And when we come back, we're going to continue talking about all this.
I'll give you a name.
Too late now. I'm going to give you a name. A check on the markets. Squawk Box returns after this.
AI meeting agent.
Let's check the futures right now. You can see sharply higher after the S&P and the Nasdaq both hit record highs yesterday. Mike Santoli still happening. Mike joins us with a look at the markets. More new highs indicated today, perhaps.
Yeah, they are, Joe. I would say it's a moderate follow through to the upside in terms of percentage from yesterday's pretty emphatic and broad rally in response to that CPI report. Clearly, people were tensed up for something potentially a little bit hotter. The market read it as basically removing the last impediment from here to Labor Day for any kind of melt-up type activity. We're not going to have any known catalysts. Although the PPI tomorrow could complicate the picture. You see, we've kind of gone sideways, as I was mentioning yesterday, for a couple of weeks now. You've lifted a little bit above that. It's generally positive when the market's making new highs, maybe getting slightly stretched. I would point out we did that also, back a few months ago, where you can make a marginal new high and then have a little bit of a give back. That was in February. Take a look here at the Russell 2000, because small caps basically led yesterday, up almost 3%. This is part of the rate cut playbook. You buy small caps, low quality consumer cyclicals, things like that. Banks, they all rallied yesterday. But look at this level. I mean, we haven't really been able to do much above 2,300. By the way, there was also a big spike last July in response to a cool CPI number. So kind of guilty till proven innocent. NASDAQ 100 relative to the equal weighted version of the NASDAQ 100. There you see it, the biggest of the big doing all the work, going in different directions over the last couple of weeks. So still a top-heavy market out there, guys.
Okay. All right. Thanks, Mike. What's coming up here?
We're going to discuss who the president may nominate for the chairman position of the Federal Reserve with former Cleveland Fed President Loretta Mester. And we got some new names. Steve Leisman breaking that news on our air just minutes ago. We're going to play it back to her and get her views on who should be in that role when we come right back.
Even happened.
What Welcome back to Squawk Box. This morning, some news breaking. CNBC is learning that the Trump administration now currently considering 11 individuals for the role as Fed chair. Those include 3 new names. And joining us right now to talk about those 3 new names and more, Larry Lindsay, by the way, Rick Reeder, David Zervos, is former Cleveland Fed President Loretta Mester. She's an adjunct professor at finance at UPenn's Wharton School, a CNBC contributor. I want to also talk to you, of course, about inflation, the jobs market, BLS data, and so much more. But curious about just what your take is on this almost reality show that's now emerging. It went from just the Kevins, the 2 of them, to basically 11 different people. What do you make of how this is this sort of drama is playing itself out?
Well, I think it's a good idea to vet this very carefully. So the fact that there's a longer list is probably not a bad thing. I mean, who knows why different people get on the list? Could be that they're getting suggestions from a lot of people and they think it's worthwhile to start looking at some of those names. So I think there's nothing wrong with looking at a group of names, and I think it's probably wise to do that.
Is there anybody on that list that you think is the one that you'd pick?
Well, it's not my decision. Look, I've worked closely with a number of them, and others I haven't. I think the key attributes are, I mean, it's a difficult job. You have to have someone who has a point of view, but also listens to their colleagues. I know when I was at the FOMC, you come in with a viewpoint, and then if you listen, you might have changed your viewpoint, maybe not at that meeting, but as you assess things, as you get a new idea. So you need someone who's open to listening and thinking about things that are differently than perhaps the idea that you came into the room with. And I think a lot of those people on the list will do that, and I think that's a very good thing. Right. But you also have to be a very good communicator. And so that's the other attribute that I think is very important for a chairman of the Federal Reserve or chairperson of the Federal Reserve. You need to have someone who's going to listen, right, who's going to collect information, who's going to listen to market data, who's going to understand modeling as being an important attribute that you need to really understand, but you also have to be open to listening to the things that maybe not fit your model.
What do you make of the idea of just independence and that these folks are supposed to be completely apolitical? The truth is that none of these people have been completely apolitical. They're, of course, nominated by a president. Someone even, I'll do the other side of the aisle. Janet Yellen went from being the Fed chair to the Treasury secretary. So how do you think the public should think about this issue of independence?
So independence is a key principle upon which we end up with better outcomes for the public. I can't emphasize that more. This is not just something that is a nice to have. This is really essential that when you go into that room, whether you're a governor, whether you're a Fed president as a policymaker, whether you're the chair, you cannot be looking at short-run political considerations. You have to be focusing on the longer run and the dual mandate goals that Congress has given you. And that's going to be very important, no matter what your background is. Everyone brings their background to the job, but you have to leave all that behind and really focus in on what's going to be the best policy that will achieve maximum employment and price stability. And there's studies, there's experience that shows that if you do that, you end up with more stable inflation, lower inflation, and you don't give up anything in terms of having more volatile output. So this is an empirical fact that you end up with better outcomes for the public.
Okay, so here's a different one for you. If the Bureau of Labor Statistics suspends the monthly distribution of data on jobs every month, how big a problem is that for the Fed or not? How big a problem is that for business leaders and the rest of the country and the world?
Well, it would not be the choice I'd make. I mean, yes, it is true that some of the volatility in those data suggests that there can be improvements in the data collection and the surveying, et cetera. But I would do that. I would take that tact. It's like, don't throw data away. Let's improve some of the techniques that are brought to the data. And, you know, whether that can be done immediately or not. I doubt it, but I think that's something that I would basically be working on is how do you improve the data quality? And then people using the data have to be really cognizant of the fact that these data do get routinely revised. And maybe you take that into account when you're setting policy. Whenever you're setting policy, there's uncertainty in the data, there's uncertainty in your models, there's uncertainty about where the economy is going. But that's part of what policymaking is to be able to incorporate that into your thoughts about what's appropriate for monetary policy.
Loretta, we got to run, and I got literally 20 seconds, so it's really almost a yes/no. Come this fall, would you raise, or rather, would you lower interest rates?
More data to come. We don't know yet. The recent inflation report was consistent with inflation, not really showing through a lot of the tariff effects, some of the tariff effects. But I think the more troubling aspect of that report was the underlying core services excluding housing. The narrative has been that that should be falling, and that went up.
Loretta, I want to thank you for joining us this morning. Appreciate it very, very much.
Take care.
You bet. Squawk Box coming right back after this short break.
Finding insurance.
Welcome back to Squawk Box. The futures right now, well, they look like they're going to be up this morning. In about a half an hour from now, the Dow would open up about 160 points higher. The NASDAQ up about 85 points higher. The S&P 500 up about 20 points higher. And then we got crypto also on the move, my friend.
But that's the momentum trade we've been talking about with the averages. And I don't like when people say it's a bus coming, because you know what you think. The bus is coming.
I know.
Can either get on the bus or get run over by the bus.
That's true.
There's crypto over 120 again on Bitcoin, but we've also been talking about the recent move every day in Ether outperforming Bitcoin and being big focus. Standard Charter is now raising its 2025 forecast on Ether to $7,500 and says it could hit $25,000 by the end of
As you would say, now they tell us.
Yeah, exactly. I mean, you could have had Ether under, well. Do you ever go to Chili's? Chili's is pretty good.
It is pretty good.
Yeah.
We're going to talk about Chili's because their shares, Brinker International, which owns Chili's, by the way, beating on the top and bottom line, driven by a 16% increase in traffic at Chili's. Basically, the Kernan family.
We haven't been.
That? No,
we haven't been, but we're not opposed to it.
Shares trading right now. You're looking at it $165 up about 6.5%, which is a lot better than where the folks at Kava were at this morning, down about 25%. Meantime, sale point up big this morning. JP Morgan giving them an upgrade. The firm taking the stock from neutral to overweight with a $26 price target. That's another 20% upside from where we are right now. JP Morgan calling the sale point best of breed in the enterprise security sector. For those who don't know it, the stock is still 25% from the February high. I never like when people say something's overweight, but they're overweight this or that. Yeah, exactly.
Especially a food stock. Make sure you join us tomorrow. Squawk on the Street is next.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Bulls remain on the hunt for some fresh all-time highs as Besson floats a potential half-point rate cut. Small caps come off one of their best days of the year. 10 years backing off to about 4.25. VIX with a year-to-date low. Our roadmap begins with the White House's push for lower rates. Treasury Secretary suggests the Fed should consider a half-point in September.
Also ahead, CoreWeave's hot post-IPO rallies taking a bit of a detour in the pre-market despite guidance and quarterly revenue that exceeded analysts' estimates. And speaking of IPOs, Bullish is set to go public right here at the big board, the crypto exchange, pricing its offering above the expected range. Its CEO, Tom Farley, no stranger to this building, by the way. He's the former president of the NYSE, is going to join us right here at Post 9.
Let's begin with stocks looking to extend their record run. Jim, yesterday the action definitely suggests, when you look at the small caps, that the race for a rate cut is picking up some steam.
Yesterday was really an amazing day because people were split about how hot or cool the CPI was. But then suddenly this wave of people just determined that it was not only cool, but perhaps we even could get a 50 basis point, which I think is a little fantasy. But I saw stocks ignite when I saw the financials go crazy. David?
Yes?
I know it's a little controversial, but what financial just exploded yesterday?
Rocket Mortgage.
Goldman Sachs. Yeah, all-time high yesterday.
Come on, guys. Rocket Mortgage was up
TJ.
What? Wasn't it? It was up a lot.
I'm talking about a more major financial. I'm just only pointing it out because it's the same day that
you mean the fact that the president asked for the resignation of his chief economist and tells its CEO to go back to being a DJ, which, by the way, he hasn't been doing, at least not publicly, in a long time.
I just wondered what the president think of Costin, because Costin's very good work.
He'll be next. You never know.
No, Costin's good. I think actually Hotchkiss is pretty good. There's some guys who are much worse. I have a list of them.
Well, at some point you may be subject of a social media post from the president saying that you should be fired.
Well, I hope that doesn't happen, but here's what you need to know. Why? The reason I brought it up, supposed to your Rocket Mortgage, is Goldman encapsulates everything. IPOs, right? M&A, trading volume.
Yes.
This is the barometer for this stock market, and it took off in a way that I haven't seen in ages.
It is interesting. We have talked a lot about M&A. We had the head of the investment bank, co-head of the investment bank from Morgan Stanley, a Goldman competitor, joined us.
How did you get that book? He's from Philadelphia, that guy. He's dying on
liked him, yeah, you liked him.
Didn't you think he was good?
Really good. It was good. It was good. It was good to get
humor.
Perspective, and I think there is a lot of optimism about both the IPO calendar, which we'll get to today. We're going to keep an eye on Bullish, and the M&A.
Well, why not?
Environment as well.
Pick is calm.
It's beyond that, and I brought up something Morgan Stanley had advised on, because you talk about those things, but these financings for data centers, back to CoreWeave, for example,
am I all over that?
the enormity of the debt offerings that are associated, or the debt raising and equity raising, and the advice around them, that's something else that the investment banks are taking full advantage of, and will be very beneficial for them.
You hit on the key point. InTrader is an Easterner. It's a Jersey boy, okay? Get this. Out West, they do equity. In the East, they do debt. Now, you've been skeptical because of the whole debt thing, but I've got to tell you, that's the way of the future. See Blue Owl's doing a big one with them. People borrow now to build data center. And the West Coast ones, by the way, Rusty Brazil with an amazing analysis of all the West Coast ones, they were all cash. No more.
But there's a combination. I mean, the one that Meta did, and again, this was reported on, it hasn't been confirmed by Meta, is $29 billion. 26 of that is potentially from PIMCO in the form of debt.
Right.
And the rest is from, I think it was Blue Owl,
yes,
in the
Blue
form
Owl.
of equity. So that is equity.
All right,
but the numbers are enormous, and yes, and it goes back to a certain extent to the idea that everybody benefits in the financial world, so to speak. Right. Those who raise the capital, advise on how to do it, and everything else, and that helps Goldman.
Does that make someone happy?
No. The Mets winning made me happy.
Well, that's really kind of out of it.
Yeah.
Why? Because you brought that because the Phils got shut down by the Reds.
No, I'm just pointing out things that make me happy. Some of my children makes me happy.
You're so short-sighted.
Yeah. Yeah.
Okay,
I really don't care if Goldman Sachs is up,
oh, I
or
do.
down.
And one of the things I thought was ironic, Carl, just when the president was attacking Solomon, Solomon's business model has come together. I find that ironic because M&A is just a few people. Now, Pick at Morgan Stanley is the guy who's crushing. They had all these things.
Because they're wealth management more so than the other things. And by the way, Goldman Sachs is also relying on a lot of other things. You could have a quarter that has nothing to do with M&A and IPOs, and it still could be a very good quarter for them because of trading, because of fixed income.
I was speaking metaphorically, for heaven's sake. You think Kava's probably more. He probably thinks Kava is the focus.
Kava is worth noting. We're going to get to it after Sweet Green and Chipotle and Wing in recent days.
But don't forget how great Chili's is. I'll talk about that later.
The Chili's comps are truly exceptional.
Yeah,
we'll get to all that.
That's not
an outlier, though, given everything else.
I'll go into why that is.
You will?
Yeah,
You
because I
have
have one
the
tonight.
specific
I have one tonight.
Oh, you do?
Yeah, I'm friends with Kevin Hochman. Not friends. It's about business. But I do think, Carl, that when we look at what's happened with CoreWeave, what we have to focus on is the lockup. The expiration of the lockup, because I don't want people to get in it. That's the 15th.
It's tomorrow.
I don't want anyone to see it. It's after the close tomorrow.
Yeah.
Be in.
There's Brinker. Yeah. We're talking CoreWeave.
I
CoreWeave,
just
as
think
Jim
that
says,
if people want to be in it, you have to wait till things settle down.
it is down in the pre-market.
Yeah.
They've still more than tripled their March IPO price. Company did post a quarterly loss last night. Revenue and guidance did exceed analyst forecasts. Michael Intrader was talking about the call last night and about what CoreWeave clients are acquiring. Take a listen.
This is a structurally supply-constrained market. It is a market that is really working hard to try and balance, and there are fundamental components at the powered shell, at the power in terms of the electrons moving through the grid, at the supply chains that exist within the GPUs, the supply chains that exist within the mid-voltage transformers. There's a lot of different pieces that are constrained, but ultimately the piece that is the most significant challenge right now is accessing powered shells that are capable of delivering the scale of infrastructure that our clients are requiring.
Meantime, Street's not unnerved. JP Morgan reiterates overweight.
And it was just filled with, the call's filled with congratulations, and people are very excited about the fact that everybody has to build one of these. David, just for you,
yes,
I was going over with Michael Intrader the size of what people have to build.
Yes.
He's talking about 6 San Franciscos. What?
It's just, you can't really, What?
6 San Franciscos. Well, you felt,
and you got to power that too, by the way.
Mark Zuckerberg was talking about various parts of the map, but didn't talk about the actual building. 6 San Franciscos. That's how much is going up.
The ambitions are endless in terms of the building. We'll see what actually does take place. I think a Stargate, for example, in Abilene, Texas, and where that really is in terms of what the hopes are and how big that has to get over time. It'll be enormous. Again, your Meta and what they're building, we've talked so often about.
They own Louisiana, man.
Yeah.
Then LSU, and then
on and on and on, and CoreWeave, of course, as well.
Well, but Dave, CoreWeave, you got to understand. If we go to reasoning, the next generation of NVIDIA, Vera Rubin from Philadelphia, by the way, what you will find is that's reasoning, and that's why we need all this. In order to reason, you need much more power.
Right, and inference, right. All good for, potentially good for NVIDIA as well. Jim, specific to CoreWeave, obviously And I've been mentioning the lockup for quite some time now, as you know.
300 million shares?
I don't know what the number will be, but we'll see what the impact is of that, given the float is not particularly large. But as for the quarter, growth and backlog wasn't as strong as some may have hoped for, and guidance was mixed. That at least is part of the note from Moffett-Nathanson this morning.
I really think his... Now, I don't want to criticize any particular analyst, but I do think that what they did, they're constrained by power. You need more power. They could do much bigger backlog, but they don't have the power.
Well, water's the other issue. Have you seen some of these stats about projected water use for data center in the state of Texas alone would be 7% of projected use?
That's why you have to go up where Microsoft's doing it, in Washington, where there's ample water. State of Washington, ample water.
You're talking hundreds of billions of gallons of water over the coming years.
These things they haven't figured out how to do it. Some people feel that's why quantum has to be involved, because quantum doesn't burn burns
quantum is a long way away.
How far?
I don't know. I don't really understand quantum, and
well, they just announced this new user conference in Japan in September, right? You had them on last night.
Yes, and I am like D-Wave.
Oh.
We are on Mad Money putting every single one on. Why? Because that's what the public wants, and we have got to stop.
We got Rigetti coming up in the 10 o'clock today.
Yes, and Rigetti's real.
Yeah, no, I know, but these are not at scale, right? The idea is to do it at scale. And that's what we're talking about. How many years away are we from scale quantum, which would be a game changer, apparently?
Well, the question then is, you really want to go after it? It's Google and it's IBM.
IBM, right.
And I think
that Microsoft also.
I think IBM may be very real, and that stock is just taking a beating. So that's what I'm focused
on. But power usage, the environmental impact, potentially water, is all something that this is.
Well, this administration,
the enormity of what is needed to power these data centers.
Do you think the administration is focused on?
Well, I think they are focused on it, certainly from a permitting aspect, in terms of allowing for a lot greater or easier permitting. But I do think the lack of potential support for wind and solar, when they're there as potential energy sources, could be detrimental to the effort.
But that's why you go to Louisiana and make it all nuclear power, the Entergy. Do you know it was nuclear power that was the problem for the 2012 Super Bowl, the one that Beyonce sang at?
I did.
It was a 19-minute delay. It was a problem with nuke.
Really?
Yeah, problem nuke. That went down. That would destroy Meta.
But all that said, it's still going to be a while till we have a substantial increase in power produced from nuclear power plants in this country,
What we have is TVA, but we do know that GE Vernova has pulled forward when it feels that nuclear is going to be ready, 2030. But nuclear is the answer. Wind is great, except for sometimes it's not windy. And solar is great, but geez, the sun, I don't know. Sometimes is that the sun? I don't know.
All true. And that's what yes, the sun doesn't always shine, the wind doesn't always blow, and you need backup or batteries, which obviously is a growing industry.
I think you had like a Bob Dylan song going there, and then you pivoted.
I did. I'm no Dylan.
No, you're not.
Dylan's no Dylan.
No, we did the Monkeys and Neil Diamond yesterday.
Yes.
Well, people like that. I got a lot of good comments.
Dylan, that is incredible.
I don't know.
There's nothing quite like that period of time.
That period was amazing.
When he was writing,
My Back Pages. Can I just say?
Can't even. It's like
Is that the music? But it's not Dylan, because that would fine us $1,300.
We should just take the fines and start playing the music.
I'll write the check.
Maybe when we're Versant, we don't. We're not subject to the same deal
I'm
anymore.
thinking Versant, we have a contest for drawing of what the signet,
our symbol.
I'm going for that, by the way.
We don't have one yet?
No, but I'm going to be part of it. I'm going to be a contestant.
Graphic designer.
My daughter and I. My Parsons daughter.
Are you going to use Figma for this, or?
No, we're going to use Canva. Figma's too expensive now.
When we come back this morning, the latest on this intensifying battle between Elon Musk and Sam Altman. By the way, Tesla 5 days up, best streak since May. We'll get to Brinker, Kava, Bullish, Circle, Lilly when we return.
Okay. I'm here. I'm here. Today's support levels is 641.86 and 642.28. And we just had a new high there, so that might be a changing. We got a yin yang at 642.04 with a triple top yin yang. So I bet you we pull back there if we do. Where did I catch it at? Yeah, pretty much right there. God, Bessent wants an aggressive Fed rate cut. He's talking about aggressive, 150 to 175, man. That's very aggressive. More aggressive than I'd like, Mr. Bessent. And so we got Kava. Megaphone pattern with a head and shoulders. Loo, dee 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 da. Kumbaya. Yeah. Let's just go ahead and clean these all up. No, I'll leave it there for now.
Today.
Some new developments in the battle between Elon Musk and OpenAI CEO Sam Altman. A federal judge has denied Musk's bid to dismiss OpenAI's claims the billionaire is engaged in a years-long harassment campaign against the maker of ChatGPT. Meantime, the FT says Altman and his company are preparing to back Merge Labs, a startup that will compete with Musk's Neuralink by connecting human brains with computers. This is, you need a map, Jim, at this point to sort of understand the dynamics of this feud.
Well, there's just, I'm going to say that you've got two people who are so opinionated and bullheaded. I really think, David, you know them both, that these are people who just fight. They're fighters, not lovers.
Yeah, I mean, they're different. They're very different, at least in the way that they approach things. But that said, they are in a significant competition that has continued. Remember, there was a time when they were united to a certain extent. Musk was the original money behind OpenAI. The idea that you would harness the power of AI but do it safely, that seems to have sort of been cast aside. Altman might argue with that. Musk is still suing, by the way. You've got a complicated restructuring you're trying to undertake at OpenAI. You can't dismiss the litigation.
Keep your blood pressure lower by avoiding health scams.
Ultimately mean. And Altman outmaneuvered Musk to some extent. Remember the Stargate announcement coming right after, even though when Musk was at the White House and even in Saudi, and then Musk trying to sort of take the momentum back. They've been going back and forth there. So yes, XAI and OpenAI, great competition.
Maybe that's why I got high blood pressure. I get all them telemarketing calls.
And that's not going to stop.
Well, I'm going to stop you. Watch why I have high blood pressure, all them telemarketing calls. Tesla stock is rising again. Focus shifts back to the robo-taxi.
Not enough. See, you know, if Jensen Wong were
La 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 la. Happy holiday to you. Time to take off my shoes. How many more minutes I got? I got 8 minutes. I think I'm just going to take my time today. When's the PPIs come out? Or have they already? Oak. Stocks moving today. Cornware, Kava, Intap, Brinker, Alibaba, Webton. I don't even know half of them. Cisco, something has finally changed for this late 90s darling. Cisco Kid was a friend of mine. I would like to kiss Emily Capano on the mouth. What am I doing? Gina Ortega, I don't even know who she is. I don't care. There's some cracking in my neck. What's cracking? I like kava. I don't know why it dove so much. A guy that owns Stock Twits was saying the food wasn't that good. And I look at it and I said, man, I'd love to eat there. Maybe it was just healthy looking. At least try it. Oh, I better get my platform ready. Anybody out there? Stretch. Oh, bell's gonna ring in a second. That's fast. If it hadn't already, probably already has.
Now this, we'll get to some of the targets.
We are in it.
Yep. The guys are yelling this morning. See if it holds the 200 here. Fed rate cuts. I already read that. Today's the 13th. 645 strikes or the 644s. I'm not in nothing yet. I'm just going to wait for a pullback. See if we hit 644.26 right off the bat. Oh, we have a big bounce on RGTI. Let me see, /ES. RGTI's big bounce. Jimmy's gonna wait. God. This market's crazy nuts. We got 3 white soldiers. We got an inverted hammer. So I think we hit that 64 area. $64.50. Work set. Well, I thought I set one. What happened? Well, there it is. What the fuck? Oh. There. Hello. Everybody hear me? Yep. Can everybody hear me? Yes or no? I don't want that. Okay, we're getting... Wait for the 9. I'm going to wait for the 9. I feel like we've overextended our run. Our GTI had a nice little bounce this morning and pulled back. It might have been short coverings or something. I hear a yes, sir. Yes, sir. Yes, sir. Don't say no, sir. I'm going to raise my alert above the 9. Mr. Coin had a little pop this morning. Coin. K-Web, after hours and pre-market, China. Tesla had 4 white soldiers. New high on the SPY. And a new high on SPX. This market's real strong. I'm just going to wait for my opportunity. Could have scalped them for $100. The 6480s. Got one of them. Kava, nice bounce. That didn't make sense what he said, man. It's a good company. At least I think it's got good food. I'd eat here more than I'd eat anything if I had one around me. So take that, Howard. Hope you're not listening to me right now, bashing you. Let's say it hit its resistance. I had, let's go to the 20-day. I already had a resistance. Yep, not there yet. I got 76.47. Another $6 to the upside. I'm going to raise it to the bottom of that, to the top of that second soldier. The alert for SPX. It's about a $4 dip. Tesla might bounce off the 21. I'm getting ready to squeeze again on SPX. Today is what? Wednesday. We're waiting, we're waiting, we're waiting. We are. So I might move to the 6485s. This thing breaks 6485s. If not, the 6480s. If we get the pullback. We did break the higher low. Okay, here we come. Double top. It's now or never. I mean, now or later. Produced a new high there, but didn't break the orb. Take off my watch. Today is the 13th, right? Yeah. Oh, there it goes. I think I need some warm tea in my mouse, so I might make some decaffeinated. Kava? Yeah, Mike. We want to put a Fibonacci on this thing. Maybe right around the 63. Right here around 67 bucks. That would be a low, yeah, 67.50 maybe. Tesla. Damn it. There goes 6,500 to 125. Last time I saw the 6485s, they were at 370. Kroger down. That had too big of a run. Target down $1.64. Costco down, and CrowdStrike have the biggest drops on my watch list. And the biggest gainers is AMD, Chewy, Baidu, Nike, Tesla. New high on SPX. Well, shit. Magnificent. Got any more outrageous picks today? We're going to 10,000. God. Well, shoot, I missed a good 100%er on SPX this morning. God, look at that straight line up on /ES. Everybody's saying on hopes of Fed rate cut. So they're going to price it in, and then we're going to have a big knife. I mean, hello. Well, that resistance on coin, 345. I had 344.93. We're at 344.45. I'm just wait for the knife to catch us. So it wasn't outlandish, huh? I'm going to raise my alert above the top of the orb. And on the 63 on the /ES. We bounced off of it quite a bit there. There's this, well, I'll talk about it later. I got my alert set. Chest, I'm gonna raise it up $1 there. Okay, here we come. Prepare ye in the name of the Lord. Triggered. Okay, I got 390. The 64.85. See if I can buy one here. Yeah. We're at the 21. First thing to stay bullish. 490. $390, come on. It's got to hold here. It might not. Might get out of it and wait. See if we get a bigger dip. Here we go, 440. There's 450. I'm gonna get out here. 450. Thank you very much. I appreciate that. 3 contracts at $60. Oh, there's 490. Nailed that one. I still think we can dip more, go down a little more, but lately I've been over the market. I almost feel I'm wasting my time and not really getting anywhere. Jesse. Lately, just been over the market. And I almost feel I'm wasting my time and not getting anywhere. Study chart patterns, moving averages, and being in the now. There's so many mixed messages out there. Good job, Embardo. I'm going to wait a little longer here. I almost thought about getting puts, but I ain't going to go through that route again. If we break below the 9, we could have a pretty good drop. How does Jimmy sound, everybody? Let me see here. Oh, maybe my YouTube channel. I bet you it stops now. How do I sound now, YouTubers? Does that sound better? It was the YouTube. Sounds magnificent. Good morning, boss. Good morning, Parge. Good morning, Mike. Aringa. Use sound tab. Use sound tab. Okay, get ready. Jimmy says we're going to pull back. I think we got us a little 1, 2, 3 right here for it to stay bullish. Let's draw this in so we won't get. We've got a snake. Come on. Be nice to have a little bit more drop, but we could get a scalp here. But I'm just want to be patient today for some reason. Like to see a double bottom. So each one of these candles right here is going to be a support level. We're going to take that highest one right there. That'd be your first support. See where we pulled back on that candle right there? Right there. And then the next one will be right here. We're back to the third soldier. This could be it. I'm going to use the same ones. If we break this, we got a wall right here. It'd be nice to jump back down to the 50, so I'm going to raise one. These things are too low. Create an alert off the 50 SMA. Minute. We got the 63. Replace that. Let's see if we bounce off the 6. Okay, here we go. Prepare ye in the name of the Lord. Let's get over here where we can see the. We're at the 200 on the SPX, on the /ES on the 1 minute. I missed my opportunity there at 290. I should have grabbed that one because I didn't see that until just now. Damn it. I don't want to chase it. I'm going to go get a treat, come back and refocus. I'll be right back. We hit the 21 on the 1 minute. We got a 1, 2, 3 and a yin yang. I think we just triggered it. Yep, we just hit the yin yang.
All the openings and the options that the president is going to have.
Oh,
with the Fed,
shut up.
right? Because so he's just appointed Stephen Meyer.
I'm disappointed to have to listen to you every morning, Sarah. Oh, you're cute. She is cute. I mean, she really is. But he's not. He's a dick. A Russian commie. And I got these perfect little treats. Slash DX is a US dollar. Can't find the symbol. Okay, we got 310 on our little thing here. Oh, here we go. Get ready. We're at the 50. And we'll get to 63. Prepare ye in the ready of the Lord. We're getting ready. Double bottom. Start to position the 64.85s at $2.50. I'm not in big because I think we can come down and hit the 63 with another crow. But I'm in it right now just in case. There was a couple of alerts. $2.50. I'm having my last treat. On the 2 minute, we're at the 63. 5 minute, we can hit the orb on the slash ES. We got the 200 at 64.87. And on the 30 minute, we're at the 9 with a tweezer bottom on the 30 minute. So these two look pretty good. All three of these do. The one that don't look the best is the 1 minute, but it's got a fallen wedge. Here, I don't want you on there. Tesla pulled back to the 200. What'd you say? I didn't hear you.
I just said
I'm here, Jake Paul. I'm here.
watching this 15-minute candle, seeing if it's going to touch the orb.
We've got a tweezer bottom on the 30 minute. I'm in them at 250. So we'll see.
64.85.
Yeah. I'm not saying it's a good spot. I'm just saying it's because we were at the 63 here and we had a tweezer bottom on the 30 minute. And we hit the 50 on the 5 minute. 1 minute could have dropped more. I just think this market needs a little breather. I might have to clean this up already. I can tell right now. We could get to the bottom of the orb on the SPX on the 1 minute on a 1, 2, 3. Right now we're kind of bearish. And he said the 15 minute on the SPX. And we got a tweezer bottom on the 30 minute. And I like the 15 minute too. And we got a tweezer bottom on the 15 minute also. On the 9. So this keeps it bullish. Yep. On the 15.
I saw at that 9, but I don't want it to do a true tweezer bottom.
You don't think it has yet?
No, it's got a hit.
Were you talking about the wick or the body?
64, 88, 75.
He's talking about the wick. Okay, that's a different tweezer than what I always look at. It's like we had a tweezer top on the 15 minute if you look at the bodies. Well, waits around too much longer. I'm going to get out of this one and wait. Might jump in there and get my tea. We had a 1, 2, 3 on the /ES on the 2 minute. Off the 63. So we got to break, if we break the 21 here, 64.92 something. I'm going to get precise. 62.
Zero reason for Mark to do it this morning other than going to grab that C2500 game flow.
Yep. Yep. Exactly. Yep. Right on.
Push up here to that game flow and then bring it back down.
Yep. I agree with you 100%. And if we break the 65, then they'll be calling out the 7. Much longer. I'm just going to go ahead and cut this so I don't want to be stuck in a trade all day. One, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes now. We've gone sideways. And it's just not got. Okay, we're getting coming to support here. Snake breakout, double bottom. I just got one contract. So if I was to buy more, I'd buy 4 of them. I gotta see where that double bottom is. Yeah, we got a ways to go at Orb. By that time, it'll be I don't think it's going to do it. And we're up to the VWAP. Watch the VWAP on the /ES. Okay, we're about to support, so we're going to find out. If it doesn't hold the VWAP, I'll get out. We just triggered my alert. So this has to hold here or I'm out. We're at the VWAP. Yeah.
Great home.
Yep. I'm at the orb on the 1 minute too, just a little bit below it. And we're at the 200 EMA and SMA on the 2 minute. And the 1 minute's held to 50 SMA. So grab 4 of them. Tesla bounced off that. I think we're going to go on down to 64.57.50. $58. tweezer bottom on the 1 minute. We got a hammer on the 2 minute. We're at the orb on the 15 minute, and we hit the 50 SMA on the 5 minute. It didn't hold the orb. Well, my gut was right this morning. We're about to hit the 1, 2, 3. 64.58 is what I had. We were just a little bit above it. In fact, I think we hit, let me see, might have hit my alert. Yep. I think I'll grab 4. See what that gives me. That'll give me 138 if I get them at 110. Now give me 5. We can still drop more. Actually, we're getting close to 64.55 now, another $9 drop. $4 drop. See this, what I'm talking about, this trend line right here? $0.90. I got 90 cents. Now, if this doesn't hold, I'll definitely stop out. .22 average. We can get one more candle down. I'll get my phone. We're at the 50 on the 15 minute. We're at the 50 on the 5 minute. We got to break the 9 on the 1 minute on the /ES. And we got 6483.33 on the 200 on the 2 minute. So if we break them walls, they're all pretty close. Probably pay attention to the 9. I mean, 1 minute. Right now my average is 122. And that's the 9 minute. 9 on the 1 minute right there. So if that breaks, we haven't been able to break it ever since I got in the trade. There we go. It's not much back to the orb. Tesla's got a double bottom out of a snake. snake breakout double bottom off the 200 EMA. Mister's pulled back to double bottom from yesterday's low. We got a double bottom on SMCI. I'm at 110 now, my 64.85, so I don't know. I'm going to hold just a little bit longer. I don't think we're going to have much today. We're above the 9. We might get up there to where I can get out even. $10.30 estimated oil inventory report. Actually, it's a triple bottom on Mister. Man, them candies were good. I hate eating sweets like that. I'm gonna go get my tea and I'll be right back. I'm still in these suckers. $5 times 22 bucks is what? 110. I'd be down $110 if I sold it at $1. Snake breakout, double bottom, 3 black crows. We still got these 2 targets here and still the bottom of that trend line, so this thing could dip down to 64.51. 64.51. I think I'll get out. Doesn't hold this double bottom. snake, breakout, pullback, higher low, triple top break. Actually a little bit higher, triple top though. Put it on this tweezer top. That's right at the 21. Yeah, I don't think it has it in it today. Oh, we just broke it. Well. Well. Back to the orb. Back to the orb. Howard Linson, if you're listening, we broke resistance at 71.66 on Kava. I know you're not. Though he did watch one of my videos once. Apple. Apple looking real good today. Broke resistance too, Apple did. Well, we got a triple top, an ascending triangle on SPX. And there we just broke loose. Not no more, it's a Darvis box. Back down here again. So I didn't want it to go below that there candle. We're going to hit the 200. Tesla hit the 200. Slash ES hit the 63 and the 50. Got 3 black crows on the 1 minute. I'll be right back.
Oh.
We've got a fallen wedge on the 2-minute on /ES. We've got to break the 9. It's as close as we've been to a pattern right there on the 2-minute. We break the 21 on the 1. We go up on the /ES. Tesla broke below support. Boeing has a little snake. Kind of broke out of it, but then it created a lower low. Apple, even AMD bounced up and pulled back. I'm being very cautious today. I'm waiting. I mean, I got my first good trade in, and then the second one kind of just holding here. And I'm not very big in it. We're getting back up to resistance, 64.57.16, and that buries right under the 21 EMA. And we're still below the 9 on the 1 minute. Now I'm down 250. And I'm having me a chai tea. A little bit green. If I sold right now, I'd be green for the day, but by little. I almost want to see if we hold this 200 EMA. The 3 black crows, breakout, pullback, double bottom, lower low. And we're at resistance right here to break. If this breaks, it's an easy shot to triple top, quad top up here. You got 1, 2, 3 bis 4, and that hits the 63, so I want more. And right now the market's bearish. SPY calls are cheap. The 644 is at 75 cents. There's just a penny squeeze in between them. The bid and the ask. I might go for that. Yeah, that'd have been 5 cents right there. I'm getting some fake alerts. It says SPY's bullish, says ASPX is bullish, but I don't know yet. We did bounce up off the RSI on the 1 minute. Mr. broke below support. HIM's new low. Double bottom on HIM's from yesterday's low. Coins pulled back to the 200 on the 1 minute. I mean, we had a pretty good run yesterday and that breakout today. So let's look at the SPY on a bigger time frame. Let's go 15-minute, 5-day. Clean this up. Yeah, see it. SPY could pull back strongly. Here they come. They're after me. Yep, we SPY could, if it doesn't hold to 63 on the 15-minute, the SPY, we could hit 640, another $3 drop, 641. So if you're in anything, just be careful. Just know that you're at a solid support here. And this is the 15-minute with a tweezer bottom off the 50 SMA. And we could easily pull back to 640, 66, 641. We broke the 21 here, so we've got a little buying power. But we're at resistance. $52 times 5 is what? That'll leave me 50 in the green, 40 in the green. There's 75, that's even better. Right to the 63. That'd be a triple top. Boeing's got a triple top out of megaphone out of a snake. Boeing triple top megaphone out of a snake. So that means it could pull back here to a third time and be a stronger buy. Now Funky noticed something yesterday. If you look at the daily and the 4 hour and the 1 hour time frame and you find a snake, that could be used as a swing trade if you get the bottom of it. For example, you have snake right here on Boeing. So you draw that baby in. In fact, I think I already charted this up as one. So you have snake, breakout, pull back, boom, to double top. On the 15-minute, triple top. Tesla getting weaker. We could see 340 for a strong buy on Tesla. We just broke below the 200 now. We're definitely weak. Who's in puts? Dang, that's good stuff. I timed that perfect. We're at 74 studio. We're at the 1, 2, 3. So it's your last of it. And on the 15-minute, we're at the 63. So you got two confirmations there. Oh, shit. Well, I think it has to hold here. Anything below this, I'm going to get out and buy the cheaper ones. Let me see how many. So if I get him at 40. Oh, that'd be cheap. If I buy 1,200 worth. That would be 60. I like that. I'm going for it. The 6470s. $64.70s. Oh. $64.70s at 180. Mm-mm. No. Bear attack. Mister's got a knife. 384. Hymns pulled back more. Coin is at little below the 200. Still holding support here on the 2 minute and the 1 minute. NVIDIA knife. We'll look at Cisco. Cisco's got a snake breakout, pullback, higher low. NVIDIA's at my support line right now at 180. And where'd that come from? What the heck? I don't know where that come from. It's not 30 minute. It's not the 20. It could be the daily. Yeah. 4 hour. I need to write that. I don't know where that come from. I have no clue. 15 minute. Yeah, it could be the. No, well, yeah, it's definitely the 15. We got a quad 5 of them. 1, 2, 3 bis, 4 bis, 5 on the video. Market's weak. You got to be careful. I'm maintaining it. Apple has support at 230. 230.50. It's just a bare fact that we're bearish, and Jimmy felt it this morning. So I'm going to go in there in the kitchen and warm up some soup and cheese chips. Or I got potato chips, but I think cheese chip would be healthier. Come on, baby, let's have a nice little rebound here. We're at 190 now, the 6470s. I'm up a whopping 10 cents. 20 cents. 30. Yeah. I think I'll take it here. $64.70s. $2 in at 180. 205. We're definitely at a resistance level here. Out at 210. God darn it, they're gonna fly now. It's 230. $240, shit. $250. Ninja. $265. Fuck. I just hate this. We're at the 60. Oh no. Well, that would have been a nice tritz. That'd been $500 I left on the table. No, I didn't leave that much. 80 times 5, 400. Tesla reversed. Whoops. Damn. Days like today ain't seemed like they're that easy for me. I've made back there, I made some back there, but man. That there would have been a nice trade. $120 times 5. Would have been what, 600? Yeah. You got to think you got to move them up when you get out that far out of the money. You got to move them up. We got a new high on IWM. The opposite. IWM works the opposite a lot. So I'm going to go warm my soup up and come back. I don't know, it feels like I'm pumping muscles on my body for some reason. If it's the way I'm eating or what. And I got to run to the bank. We are dropping back down again. Let's go to my watch list. Chewy, AMD is holding, Baidu, Nike, and Lulu. What about their little Starbucks? Boeing is kind of at a support. And there's $2 here for SPX 195. I'm gonna look at Starbucks first before I trade this. Starbucks and Disney. Disney's at the 200 on the 1 hour. 64.70s at 205. We've got 3 black crows with a hammer. Might be baby scalps today. Let that be said. Oh, God darn. Back to 2. What's going on here? We're back at 2 to 205. Oh. Nope. Nope. We just busted below support. Shit's so down. My neck's killing me. We're at 220. $225. I can't hardly move my neck anymore. It's really starting to get stiff. It's been fractured before. Lucky I didn't get killed. I think I've hit close to death probably 3 times. There's 245. Now we're talking. $250, baby. I'm out. I'm holding 1. $205 to $250. Oh, shit. There's the double top. That would have been a nice trade. I'm out. 290. Last one sold. Now I'm starting to look good again. So we had the 3 black crows. I jumped in the trade on the hammer. Boom! To double top. So I'm sitting here at the IRS today, and I farted in the 3rd booth. Oh, shit! So I took my Lysol and I sprayed around my butt. And I forgot the girl down 2 aisles down has real bad asthma. I mean, I just sprayed a little bit. So I get up to the fifth aisle and she's coughing up a storm. I'm going, damn, all I want to do is get rid of that fart smell. So I went up to her later. I said, I know you're sensitive, and I just want to let you know that I accidentally sprayed the bottle. I just out of habit. I didn't tell her I farted. Oh, it's okay. I got my mask. And she had this fan blowing east towards where my fart was. I just thought it was kind of, I went behind the door and smiled and laughed, but I got to be real careful when I'm around this chick. And that fart didn't even stink. I just didn't want to take a chance. So, I said, oh shit. I grabbed the Lysol and sprayed my crotch. Then I forgot, oh man, I know she's too sensitive to this stuff. Habits are hard to break. Okay, here we go again, 185. I'm going to go into the kitchen and get my soup. And I want to see if we got something here ahead of this. Oh, we got a Head and Shoulders. So I'm going to clean this up, start fresh. You see this shoulder here? So I'm going to draw a trend line from the body of that candle right there to the body of this one. And I'm going to set an alert right above this here shoulder line. Now it can go straight across. You've got a left shoulder here with a wick. So that could be a Head and Shoulders right there. And I'm going to just set that straight across. And that's got to be your resistance to break will be the 200. So if this thing pulls back to the neck, to this right here, it could be my first entry. Right at 64.52.25. And if it breaks this, I'll jump in the trade and run it back up to a triple top. Or even a megaphone could break that triple top. There's all kinds of little directions to take this trade. Take it there. Take it. Yeah, see, that would be strong right there. I got a double confirmation. Megaphone. It's not a true megaphone. Then I got a triple top right here. So somewhere in this area in here. If this thing breaks right here, I'm going to jump in the trade. I got a bottom dollar on that, baby. Get ready. Prepare you in the name of the Lord. Five of them for $1,000. Oh, we broke it. Shit. I should have got 205. Paper trade, I have 205. There it is. No, didn't give it. If I get 205, I'll get in it. There. It's a definite paper trade, but if I can get 205, I'll be in this trade. Dadgummit, there it is, right? $100. I'd had $100. Okay. Paper trade. $64.70s at 2.05. If I dip down to 205 and I'm still liking the support, I'll buy the shares. I mean, there's 40 right there. So there's $35 a contract. There's 40. 50, 45 to the triple top. You understand what I did there? I kind of drew it out and told you there's two scenarios. There it is, out. 270. 265. So that was a paper trade. Do you understand what I did there, room? There, see, right to resistance. You sucker. 290. Jim, you are a good trader now. Hello, Sammy. How can I help you? Yeah, sitting here listening to you talk about this Head and Shoulders, and you gave another Head and Shoulders, which would have been a higher low on that double bottom. And I was telling my wife, she's in there cooking lunch, she said, go for it, Sammy. If you get in the trade, I'll make love to you tonight. So Sammy says, got in the trade. He run it up to the top of the megaphone with a 1, 2, 3, and he went to the kitchen. He said, honey, I did it. I'll even do the dishes when you're done. Only if you make love to me tonight. And she said, yes, I'll do it. There's 340. Pissed off. So I went in the kitchen. I said, Nancy, I did a paper trade. And she says, well, I'm cutting you off. I'm going back in the bathroom. Do I get an A+ for creativity? Johnny Ringo? So it's called a megaphone. That's the pivot point. The Head and Shoulders is the pivot point in that megaphone. Oh, Jesse. Time for some soup. Well, that would have been a good one. That'd been $500 from 5 contracts for 1,000. I'd have made 50%. More than that, I could have made 60 or 70%. Okay, so we pulled back to the triple top. If we're going to stay bullish, these are at 280. This time it won't be a paper trade. It'll be the real thing. Nancy, will you put my chicken barley soup in the microwave for me and nuke it for 2 minutes, please? I'll wash your car tonight. Triple top. Get ready. 2.75. Do we stay bullish? That's the question. And run it up to the orb. Huh? Ah, darn it. I had a chance. There it is. There it is. Okay. Let's go. 275. I have a feeling this is going to get you. 275, please. $64.70s at 275.
Washboardjim on the market floor, trading moves like a lion's roar. Sneaky snakes slithers past the rest, breakout moves, he plays them best. Jim likes titties and telemarketers too, teaching fools perks that never get old. Jim likes titties and telemarketers too. Teaching fools like me and you a work of art. Strategies tight. Washboardjim in the trading fight. Lines and candles, a dance on the screen. Risk and reward in a world so mean. But Jim just laughs, tips his old hat. He's got the moves, imagine that. Jim likes titties and telemarketers too. Teaching fools like me and you a work of art. His strategy's tight. Washboardjim in the trading fight.
I really needed to hold that triple top to keep it going. Now I'm seeing we could have hit the 50. So if we get down a little lower, I'll add 4 more. We're at 8.4 right now. God darn it. ACG, what's that mean? We're at the 50. Well, I'm about ready to stop out here. If it's don't hold, could get down to the shoulder line. This was my second support. This is my third double bottom. God, don't take long to lose your profit. I'm here. The Bears are in control. Yeah, 150. $1.50. If this don't hold here, I'm going to jump out. A little risky. Yeah, I think we can get down here. Not an easy day. I think I'm gonna definitely get my soup going after this. Go get my phone. We're at the 9. Oh. Gosh, that soup's so good. Just leaves a real good kind of sweet taste, and there's no sugar nothing in it. Tesla's at the 63. /ES still looks bullish on the 5-minute. We've got a megaphone on the 2-minute. What was that? Didn't sound good. Back to the 200 on a 1, 2, 3 bits. If we break the 9, I'll give more credence on the 9 than the 21. Wow. How'd that happen? We're at 190. Let's do it. That's the strangest thing. You reckon like that before. This one's not a paper trade. We're at 195. I gotta get up here. We hit the 200 before. So if you bought the dip, take profit. Nacho cheese. Today's commercial is brought to you with Doritos, the nacho cheese, also flavored with some chicken barley soup with cumin and garlic powder and onion powder with bay leaves and a little bit of salt and a little bit of pepper. You take and use it as a dip. You put the soup inside the chip. Oh, excellent combination. And I'll send a picture of the barley soup with the chip in it. Please break. In fact, I'll dress this up real nice. $2.10. inverted hammer. Yeah, it's too hard of a day for me. If I get out of this trade, I'm going to go to the bank. And I got to get my car license too. I might check that out. Check my wallet and make sure I have insurance. I just might do that. It popped here 3 times, yep. We got an inverted long leg doji. Called a shooting star. There we go. Let's do it. Back to 190. I might be at the driver's license place for a couple hours. Personal taxes, where are you? There it is. I thought I put these in an envelope. There it is, 2024 personal tax. Dear James, the Chevy Equinox. Kind of laying around being silly here. Should have got 8 of them down there. Ooh, I got a hair in here. Whose hair is that? My soup. God, that's good. Mr. Reversed. Oh, here we go. We're at the 63. We got to break the 63, as Bug says. Always clean janitorial. May I help you, please? You know what? You suck. Back to 190 here. I think after this I'm going to go do my thing. Might as well, on a day like today, might as well just get it out of the way. Sit and trade while I'm sitting there at the driver's license place. Usually I have to wait. That is real good soup. I'll show a picture of it. This is chicken barley soup. It's just, I mean, I'm gonna tell you how to make it while I'm waiting for this thing to pop. We're at 185, 190. First you gotta do is get you an Instapot. Cut up an onion, slice it up, put it in the Instapot with a little bit of butter. Let it caramelize. Then add garlic to it. You know, I added a big old huge garlic to it. And then I had everything chopped up. I put in 3 chicken booby halves, cut them up into cube-like pieces. Celery, about 5 or 6 celery sticks. Organic carrots. There's the onion, there's the celery. Organic carrots, cut them up. Celery. Added that into it after I cut up the chicken, put the chicken in it. And then I take a tablespoon of cumin and 3/4 of a tablespoon of garlic powder and onion powder and a dash of salt. Use the best salt that money can buy. Put a cup of barley in it. There's barley. And then 4 to 5 or 6 glasses of chicken broth. Put on the lid. Stir it up just a little bit. Put 5 bay leaves in it. I had small ones, so that's 5. 2 or 3 if they're bigger. There's going down to a double bottom here. This market's not very nice. Oh, I thought that was bullish. That ain't bullish at all. The 5-minute, I had it charted wrong there. We're at 200 here. This needs to hold. And then put it in the Instapot for 20 minutes. And let it, after it cooks 20 minutes, let it run another 20 in there. Just after, as it depressurizes. And it's some of the best soup. Really good. I should have got out of it even there. So we're at a double bottom, triple bottom. This needs to hold or we're in trouble. Yeah, it sucks. There's my notepad. I almost forgot my checkbook. Where's my checkbook? fuck. Do not write. Yeah, I'm gonna go get my license because I don't want to sit here and pick over trade today and keep making the same mistakes. Personal taxes with that. Got my insurance. Uh-oh. Where's my insurance at? July 12, 26. Okay. Put that in there. I'm gonna go check one thing. Well, we hit the right shoulder there. Left shoulder, head, right shoulder. So it comes back and retests the right shoulder. If it does. This one ain't pretty. .642.28 I have on the heat map. We got a gap here. So that support would be right around 642. First one. If it does dip, not hold this support level. $642.67. If that doesn't hold, that's a double top break off that wick. Triple top, but that's on a 15-minute. 642.67 if this doesn't hold here. $649, 64.49.15. And that's a huge megaphone. $64.50. Okay, well, I'll be right back. I'm gonna go to the car, see if I got my other paperwork. I didn't get it. I usually get something in the mail, so I got to do my tags, but Boss Duty likes the song. Definitely our Bears are in control today. We've consolidated at a bottom here for the last couple hours. Make sure I got enough water too. I'm gonna take it with me. bills. Person tax. Well, I'm gonna go do my thing. Hopefully I can get back here in a couple hours. I'm still gonna hold this and watch it. Set a stop at the double bottom. 64.49.15. Right now we got a falling wedge. So the new resistance is gonna be right here to break. Around 64.55. I don't want to take too big of a loss on this because that'll be all my profit for today. So I'm going to leave the TV on. You can mute it if you don't want to hear it. Tesla's been holding the orb. No reason for Chewy to be running. Draw this up. It's not looking too good. Got a triple bottom here.
Taxis in geofenced areas of Austin with about 5 cars running around and only allowing your super fans to ride in them. So, you know, I don't know who needs who, but I'm pretty sure that neither one is going to end up meeting each other. And at some point, there's going to be a real battle for, you know, which app the customer clicks on in order to hail their ride. And I would say the best news out of all of this is that ultimately,
Okay, I'll be back.
the consumer is the one that's going to win in a big way. And we're going to see a massive shift away from, you know, personal automobile ownership to truly an autonomous vehicle future where you're a few seconds away from a pickup at any point in time from a variety of competitors, and I think everybody wins in a really safe ride at that. So I think everybody wins from that future, and it's which companies are going to win along the way. There'll be multiple because this is a 10 or 20x type of situation over the next 5 to 10 years.
Yep, getting rid of the drivers. Hey, bring it to Chicago. We need to hear it now. That'd be awesome. All right, great stuff as always, Andy. Appreciate it.
Yeah, thank you.
All right, that's Andy Swan, co-founder of Lightfolio. You heard him, Kevin. You know, the stocks pulled back about 7% from those all-time highs that we saw just last month. How do you want to look at this one from an example trade?
Tom, this trade has as much to do with the level of implied volatility as it does as direction.
Uber.
So when I'm talking about this, make sure you understand. You can your direction, your prop, you can prefer it to go up or down. It doesn't matter. But here's what I'm identifying: the IV percentile right now on Uber is a 5%, which means that is extremely low in terms of the level of implied volatility over the last 12 months. So based on that, Tom, I looked at a trade that gets long Vega, buys volatility at this 5 percentile. So Tom, I went out to the September 19th, bought the 95 call, and then sold next week's August 22nd 95 call. So just the 95 call calendar. Can it be the 85 put calendar? Of course it can, right? It doesn't matter, but the key thing here is the low implied volatility that you want to participate on that gives you about 6 Vega. Could you go further out and add more Vega? Yes, you could. Yes, you could. So I did about the 4-week spread, Tom, spending about $1.70, trading about $1.65 now, but this implies a small grind, up towards the 95 strike. Like I said, direction is the individual choice, but the implied volatility is what everyone should be looking at, Tom.
Yeah, and we talked about that, the VIX being at basically 8-month lows here under the 15 level. So implied volatility levels have come in. And in the environment, Kevin mentioned the IV percentile rank of only 5%. So it's basically in the bottom 95th percentile of what we've seen those levels of implied volatility over the last 52 weeks, as Kevin mentioned. But inexpensive exposure to the upside on this example trade here, going out to the September 19th or September 19th monthly options. Those expire in 37 days. Buy the 95 call, sell that same 95 call in this August 22nd weekly options that expire in 9 days. That same 95 call. So basically, you know, big month-long 95 strike call calendar to the upside, paying roughly about $1.70 debit. The debit you pay is going to be your risk. So you got $170 in risk if you pay $170 on this. But you can see here from the risk profile, yeah, you want it to go at or near 95, but you've got a range probably, most likely between about 91 on the downside, about 100 on the upside. You've got a range where this stock can trade within and you can still be potentially profitable on this one, and you have that ability to roll or adjust that short option multiple times over the next month or so, 5 weeks, into that September 19th expiration. So keep that in mind. Hopefully collecting credits, increasing potential profitability, lowering that initial risk that you took on the trade. But definitely directionally, you need that to move up at or near that 95 strike with a decent range on this one. You got some assignment risk over the next 9 days on that short option also, so keep that in mind. So good look at the call calendar there for exposure to the upside.
Well, they got down.
But let's take another quick break. When we come back, we're talking Deere and Company, the industrial and agricultural
Can get worse, I think,
stocks up
if we don't
about 20%
reverse
so far
here.
this year into their earnings tomorrow morning.
Meta's down too.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online
I got to get
videos,
this done,
podcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals.
I don't want
you
to
can spend
leave.
less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking more earnings. We're going to lead off here with John Deere, not John Deere, Deere & Co. It used to be John Deere. The stock's trading about $510 a share, up 20% so far this year.
God, it's up
Let's
too
bring in George
much.
Tilla, Senior Markets Correspondent here on the network. George, when you look at this company,
Way
it
up too
seems
much.
Like, the demand for agricultural products, which is over 60% of their revenue,
I'd short it.
along with forestry and some of the industrial, the other industrial segment, it's been doing really well. Tariffs haven't hurt it at all. Just about 4% off its all-time highs. What's your take here going into earnings?
Short it.
Well, that's a good one. I think first thing I noticed is some of the financials for Deere are actually down in terms of sales and net income if you were to compare it to 2023. So I'm just going back a couple of years when I looked at the financial statements, and I also noticed. I know you guys follow the grain markets. At least I know Kevin does. You'll notice
That's
that
a
grain,
bear.
at least soybeans, have
I'll
been
see ya.
down since 2023. So for what it's worth, it seems to be. The financials seem to be correlated quite closely, if you look at the grains markets, because you're right, if you look at the product and production and precision agriculture products, both small and, of course, turf products, that's about 60% of total sales. Forestry, construction, about 20%, and the remainder, about 11 or 12%, is their finance division. But nonetheless, price action-wise, it doesn't really reflect what's been going on from the financials standpoint, but also for the underlying agricultural products, the grain markets, which have been down over the last couple of years. But the quarter two, if you look at this, just let me back up real quick. But if you look at year-to-date performance, 20% higher over last year, 44%, not hitting new 52-week highs, but essentially drifting near the highs, if you will, on the top of a trading range. But if you look for the quarter that they're about to report, EPS is only estimated to be around $4.55, and that's down 27% compared to $6.29 for the same quarter last year. Then sales are also expected to be down 9%, $10.33 billion versus $11.39 billion for the same quarter last year. So for what it's worth, price action speaks towards more positive earnings yield growth relative to the reflection of the actual growth we've seen in both revenue and sales. Just to give you some context again here, if you look at revenue on a trailing 4-quarter basis, $38 billion, 2023 for the full year, $55 billion, net income in the last 4 quarters, $5.6 billion. At the end of 2023, it was nearly double at around $10.1 billion. So the stock price action reflects positive growth, and that might be based on a couple of things relative to the financials. First off, I think that you could consider this particular stock as a Trump stock. It's probably part and parcel of the negotiations to increase exports for U.S. manufactured heavy machinery, industrials like Boeing, Caterpillar, Deere. U.S. dollar weakness, that's increasing sales overseas. And lastly, I'll say this, if you look at last quarter, which finalized the first half of 2025, they bought back $800 million in shares. And now, if you look at the total share count, it's actually quite a bit lower in the last couple of years. So, as I mentioned, revenues and earnings were down compared to 2 years ago, but the share count has been down about 7%. So they bought back around 20 million shares on a base of around 292 million shares. So that approximates around 7% of the total float over the last 2 years. And I think that's probably subject to why we've seen the price of the stock shore up quite nicely, irrespective of some of the declines in the grains, which certainly has manifested in decline in sales for Deere.
You know, George, you read my mind correlating the grain markets to Deere and Company, because farmers with more money in their pockets can afford new or upgraded or better equipment. But George, and they have short-term risks, right? Tariff risks, interest rates that have remained high. There's a lot of reasons to be worrisome. However, George, the future with autonomous farm equipment, I mean, the first autonomous riding vehicles should be farm equipment. And the advances that they're making, and in 2026 they're coming out with their next generation autonomous farm equipment. This is going to make farmers much more profitable, much more efficient, and there's no traffic in the field, George, right? So autonomous should work the best in places like this. You've got the map of your fields, and you've got your equipment, and they seem like, everything I read, they're on the cutting edge of this. And the future, right now, there may be some questions, but the future is extremely bright for them.
So everything I mentioned prior to your statement there, Kevin, was about why the price, or subject to why the price has been moving higher, irrespective of sales and earnings being to the downside. There's a caveat to all that, which I think you're pointing out very well: the technology. If you look at the autonomous technology, both in Caterpillar and Deere, the proving grounds for this technology doesn't include high traffic spaces like urban centers or freeways. That's the challenge that Waymo and Tesla have in the autonomous driving space, or robo-taxi space, if you will. I think if you look at the earnings multiple for Deere, it's also reflective of the fact that this company is a technology firm. Forward multiple this year, 27 times, next year, 22 times, trailing 24 times, 5-year average 18 times. So it's already trading at a premium relative to the earnings decline that we've seen over the past couple of years, and price again is moving higher. And I think that's based upon the technology component for Deere, plus the aspects of what's going on an international front from the standpoint of sales, and Deere being part of the negotiations as for tariffs. European sales have actually increased for Deere because the dollar has been down around 11% in the last year. That's helped increase that earnings multiple, and I think the technology component of their products also is re-rating the multiple higher. So this will be interesting to see, because if you just look at the financials, you'd say maybe the stock shouldn't be trading at this level. But on the other hand, you could say that it should and maybe go higher because it's subject to an earnings multiple that should be higher, contingent upon the technology component of their business, which has been growing.
All right, great breakdown for us. Appreciate it. That's George Tillis, Senior Markets Correspondent here, breaking down Deere. Kevin, I looked at the chart on this one. It's been trading between 495 and 535 basically for the last couple of months. So that's how I set up this example trade. If you think it's going to consolidate post-earnings, option market pricing in plus or minus $24 move in the shares either way. So looked at a short iron condor for a neutral type strategy, taking advantage of higher implied volatility levels. Going out to that August 15th, monthly options that expire in just 2 days, so really short-term positioning. Sell the 490 put, buy the 485 strike put. Short $5 wide put vertical combined with selling the 535 call, buying the 540 call. Short $5 wide out of the money call vertical. Collecting roughly about a 220 credit. That the markets are really wide in here, Kevin, so price discovery is warranted. This thing was trading from 260 down to 180 or so. So 220 credit, if you collect that, that's what you can make. $280 in risk, but that's below 485, Kevin, or above 540. Your thoughts here on the short iron condor as a neutral strategy?
Well, make no mistake, a $5 iron condor collecting anywhere over $1.50, you're up near $2 and above. That is an attractive level of risk reward, Tom. So now, looking at the move, your short strikes are 535 and 490, so about $45 is your
those break evens. All right, that's going to wrap it up for us today here on Fast Market. But stick around right here in the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Good afternoon, happy Wednesday, and welcome to Next Gen Investing. I'm Alex Coffey. Let's take a quick look at where the market sits a couple hours into the trading day as we round that midpoint on the day. Mixed market at the moment with the NASDAQ a little bit lower as we speak. It's down about 40 points, the NASDAQ 100, but obviously just off of the all-time high marks that we've gotten this week. S&P 500 up small, about 64.50 for the benchmark here in the U.S. I want to welcome in our first guest of the program. That's Diane King Hall. You know her, of course, as the host of Morning Movers here on the Schwab Network. Diane, what do you make of today's kind of sluggish price action, as we are kind of in the middle parts of this week?
Yeah, it feels like we are literally at that in-between point. And I feel like Wednesday, people call it hump day, can often just be a wild card day, and we're in between CPI and PPI. So that's part of the challenge, right? There was no big macro trigger today. Yesterday, that trigger was all about CPI and where does this leave the Fed. So that doesn't surprise me to see the Russell 2000 small caps continuing to outperform today, given that the odds are increasing for a rate cut in September. And it's not just about when this is happening now, it's about how much. And obviously that bodes well for small caps, and we've been waiting for a further breakout in small caps to say catch up with the momentum that we've seen in, say, the S&P 500 and the NASDAQ, whether we're talking about NASDAQ 100 or the NASDAQ composite, those records after records that we're seeing. What I find interesting today is some of the sector performance within the S&P 500. It was all green on the screen yesterday, all 11 sectors finishing higher. We've got that mixed action today. Leadership is in healthcare at the leading side. Consumer discretionary still one of the leaders. We saw that yesterday, but information technology certainly one of the laggers today that is weighing on the momentum. And this reminds me of the conversation that I was having with Doug Cohen earlier, that momentum remains momentum until that moment is gone. What you're hearing right now behind me is that bullish IPO, the cryptocurrency exchange, opening literally right now, having its first trade, approaching $94 a share, above $90 a share in its opening trade. Really a lot of, they're trying to capitalize on that bullish momentum and the increasing optimism around going public. Alex?
There is a lot of excitement. You combine that too with, I saw the president suggesting that he feels interest rates should be significantly lower, actually saying 1%. And you think about the Russell starting to outperform. You think of some of the digital assets beyond even Bitcoin. I mean, Ethereum's pushing 5K as we speak. You really are starting to see, let's just say, the further out on the risk spectrum assets starting to play a little bit of catch up. Say what we will about the NASDAQ 100 and the S&P 500's kind of big mega cap names, these Magnificent Seven names. Maybe they're a little bit stretched in valuation. We're certainly going to talk about a few of those, but they're still quality earnings names. I don't know that you can say the same about a lot of the Russell 2000 stocks. You certainly can't say that about Bitcoin or Ethereum, regardless of the role they play in the direction of finance. At the moment, they're much more like a gold than they are anything else, in the sense that they aren't, earnings-bearing instruments. So it is interesting as we're watching sort of perhaps the later stages of a bull market or a cycle here starting to take place, but doesn't mean that we're anywhere close to the end. Let's get to some of these stock-specific stories, though. First one that's on our list is a name that's oftentimes on the list, and that's NVIDIA, as Piper Sandler's Harsh Kumar is not even just raising the price target. This is a significant raise in the price target.
Yeah, Piper Sandler boosting their price target to 225 from 180. That's more than 20% upside. They are reaffirming their overweight rating. Part of this is where they see the drivers are. The positive commentary that we've heard about spending from the hyperscalers. They think that's going to boost confidence in ongoing demand. And then the anticipation about revenue inclusion from China. They think that adds roughly $6 billion in October quarter sales. They think we'll see some growth, of double-digit growth in subsequent quarters after that. And we know the street hasn't been accounting for that before, because you'll recall earlier this year, Jensen Huang had talked about that hit that was expected to take because of those export controls around those H20 chips. Those controls have been lifted now. Then you have NVIDIA framing that relationship with the government will it give a cut. But again, that's not being accounted for this time around. So now where Piper Sandler's view is that we will see further momentum when it comes to NVIDIA. And you mentioned in terms of where we are in the cycle. I mean, some you talk to say we're still in the early innings. I don't know that we'd be near the end, especially when it relates to NVIDIA and say the AI cycle, but maybe possibly somewhere in the middle. And so they're seen to still be a beneficiary. And even when you think about the analyst community overall with regard to their views on NVIDIA, most are bullish, Alex.
Speaking of bullish, the bullish stock that you just talked about already halted. And of course, that's ticker BLSH. We'll have one eye on that throughout the segment. Maybe towards the end, we'll come back if there's anything to update there. But moving along here, a name that's been tied to NVIDIA over the last several months is CoreWeave. This stock under quite a bit of pressure here today after a little bit disappointing numbers, but all things considered, another really successful debut. Something that this bullish name that we're mentioning would love to see in terms of performance. Several months, let's call it 6 months in.
Yeah, I mean, look, this is a company that hit the public markets in March, so in the spring of this year. And so they posted mixed results. The bleeding on its balance sheet is what's really worrying investors today. So it's causing the stock to take a hit of more than 18% at the moment, but it was indicated even lower in the pre-market. But still, even accounting for today's move, that stock has had strong performance year to date. Revenue did triple, but they are spending big to kind of keep up momentum. And so the question is that warranted? Because now there's also pressure on margins here. And are they too dependent on the hyperscalers? Because, and these large customers like Microsoft, like an OpenAI, that's one of the questions where analysts are looking at it today, because operating margin dropped to 2% from 20%. A lot of that also has to do with stock-based compensation. So that's part of the pressure here. But again, you can't ignore the growth that they saw in revenue, topping 1.2 billion there, and that was even better than expected as well. But again, the focus today seems to be on that loss. A lot of red ink there, and the question now is it worth it, Alex?
One sector that's really been favorable, kind of broadly, in addition to some of these AI-related chip hardware stocks, is cybersecurity. It makes sense, right? Those risks just continue to become more and more prevalent as time goes on, and regardless of budget, if your information, particularly around customers, isn't secure, what business do you have? And so, names like Palo Alto Networks, you'd think would have a more impressive looking chart. So this, I know, is part of the thesis behind this Deutsche Bank upgrade. But this is a really sideways looking name that's sort of an industry leader within a really strong space right now, as far as the sector goes.
Look, I'm glad you mentioned the sideways action. It is catching a little bit of a bid on this one. Deutsche Bank upgrading it to a buy. That's up from a hold. They've raised their price target to 220, so they see upside from here. But as you mentioned, it's really been range bound this year. Deutsche Bank, why the upgrade? They think Wall Street overreacting to concerns about Palo Alto's planned purchase of CyberArk. So they think the deal will actually help and not hurt Palo Alto. But again, if you compare Palo Alto compared to rivals, it's not just about them being range bound. They've underperformed. They've underperformed the S&P 500. They've underperformed their sector. For instance, if we look at CrowdStrike, that's been an outperformer year to date. It's had quite the recovery from a year ago. In terms of the business trends that Deutsche Bank sees for Palo Alto, they think there's solid demand for Palo Alto's products from a survey they did of cybersecurity resellers. They like their offerings within there, and they think software firewall sales are expected to be strong and that they could beat Wall Street forecasts. So they think that their leadership team is strong, their execution is strong, and they think their growth rate justifies a higher stock valuation, Alex.
Well said. And you see the jump today. It's not like the stock's really been a really tough performer. It's just been kind of sideways. I guess if you wanted to be a little bit more of a glass half empty, you can say, hey, it's been quite a volatile stock for very little return if you've been in it all year. But sometimes that's how it goes when you're in these higher growth industries, particularly ones that have done well on longer periods of time. I mean, it's still a stock that's doubled over the last 3 years, so not surprised to see it trying to catch up and maybe grow into its valuation here a little bit, but certainly one that has investors' attention in the case of Palo Alto. All right, last one on our list here is C3AI. Now, I've long said maybe the most valuable thing that this stock has is the AI call letters there for the stock ticker, but all things considered, it's been a tough year. This is by far the worst performer of our four, down almost 50% year to date.
Thought something similar before. I mean, great ticker, but look, this stock has had a tough go of it. It is higher today, but you have to take it in context. So, in context of its performance year to date, the stock is up nearly 7%. So it looks like investors are trying to pick up a beat down stock, but this, you have some analyst activity around it. Oppenheimer is cutting its rating of C3AI to perform from outperform. They've removed their $45 price target. So removing the price target just to me indicates lack of confidence. They talk about the revenue shock. We know the company slash is expected first quarter sales forecast. They've expected that to about 70 million. That's down from 105 million. Significant leg down, more than 30% drop in just 1 quarter. That's a big deal because a lot of its revenue comes from these ongoing subscriptions. So what's going on with the demand picture? It suggests that customers aren't continuing the subscription. They aren't renewing. It's not performing as expected. And then the profit outlook is worsening. So that's the view of Oppenheimer. We know that they're expecting this $58 million loss. So that's we're about double what their previous prediction was. And then, of course, we have that leadership change that's happening. The founder CEO, Tom Siebel, stepping down. Again, that's health reasons, but still begs the question of what's going to happen in the C-suite? Where is the leadership going to come from? And can this be turned around? So Oppenheimer's worry is that there aren't just short-term problems here. There could be deeper long-term issues. So again, the stock is not reacting to this move today, or this analyst activity today. It took a big leg down recently, so that may be why we're seeing some pickup today, but it has really underperformed year to date, Alex.
All right, let's talk to this bullish name. I think this is the Peter Thiel-backed, crypto firm. Obviously operates the exchange that you talked about. Now, correct me if I'm wrong. IPO was priced in the 32 to 33 a share range. I'm seeing 3 digits on this stock price, $100 a share, and that doesn't even tell the full story because this stock's $18 off its highs already. So for those who want to ride the roller coaster that is crypto, this seems to be perhaps the most exciting one at the moment.
And you know what's interesting about the ties to the stock exchange, the CEO of Bullish is the former president of the New York Stock Exchange. That's Tom Farley. Saw him on the floor, saw the president before, Lynn Martin, as well. She made a showing here. So there was kind of a reunion happening on the floor. It's not the first company he's taken public. He's been here for obviously a lot of public debuts because of being the president of the stock exchange. But after he left his role here, he has taken the SPAC route. So this is his latest venture, Bullish. And as you mentioned, this is a Peter Thiel-backed venture as well, but it shows the momentum that is around the cryptocurrency industry. We've been watching the price action in Bitcoin. Now we've been watching the price action in Ethereum. As you see, coin after coin catch some interest, and now, so where is the adoption happening on the institutional side? It shows that there are institutional flows here and more backing here, and the stock halted once again, so it shows that that momentum is there.
Okay, so here's my last question. I know that a lot of this is we're going to learn and we'll find out what the fair value is in this name over time. It's not uncommon for these stocks to trade really volatile when they first debut, especially when they're 2-3x the IPO price. But Diane, we mentioned Peter Thiel, obviously well known within entrepreneurial circles, but then you mentioned Tom Farley as well. Do you think having the backing of kind of traditional, successful financial players brings more credibility to this name, just all else equal?
Yeah, you literally took the thought that I was having and extrapolated that. I was literally thinking the word credence. It adds credence. When you hear Peter Thiel, you're like, okay, you think about his PayPal ties back in the day, right? And that investment there. So Peter Thiel is good at seeing, the what's next, right? So bullish being the kind of what's next. Bullish also owns CoinDesk. You recall they bought CoinDesk.
Mhm.
So they have that under their umbrella as well. So it shows that the institutional momentum and widening out of adoption within the crypto space is here, and especially when you think about the support of the government and the regulatory changes that have come in this industry.
No doubt, and as you mentioned, stock currently halted, so we'll see ultimately where it winds up to close the day, but halted for high volatility as we speak. Diane, always a pleasure. Great speaking with you and great insights as always. Coming up next, our Chart Master segment, we're going to be focusing in on Tapestry as well as Birkenstock, both names having earnings tomorrow. Rick Ducat will look at the technicals for us, and we'll look at some example trades right after this.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back. Time for Chart Master, lead market technician for the Schwab Network. Rick Ducat's here to take a look at a couple names pre-earnings, starting with Tapestry here. So in the apparel space for both of them, Birkenstock will be our other one. Really nice looking chart. Not a lot to detract from what's been an impressive rally, but you can see there are some things you're going to go through. So talk to us about this one.
Yes, and you're right, a strong rally here. You can see that it began, for the most part, at this point here, where we bottomed out during our April tariff news shock event there. You can see that that area, that low point, matches up with our purple 252-day exponential moving average. So price found support at this long-term EMA and then rallied here. So from there, we have mostly stuck to the yellow 21-day EMA as support here numerous times. We didn't even quite test at that point. We didn't quite reach it, but that was one thing that stood out to me as we looked at this chart here. Today, making new intraday highs, on pace for a higher close, 114.05, that high that we saw so far today here. So we can also see that as we head into earnings, RSI, our measure of momentum, declining somewhat, but actually breaking through that shorter term trend line and poised to re-enter that overbought area, typically regarded as a sign of strength in a trending market here. So an interesting setup here as we head into earnings here. Fairly strong looking, more bullish technical read on this chart despite the event risk situation that looms for this name.
Yeah, and of course Tapestry is the parent company of Kate Spade and Coach, which I think are pretty well-known brands. So I guess apparel is probably not fair. It's probably more in the accessory and leather goods space, but all of that part of fashion, the greater fashion world. But looking at this space, obviously most of the volume below, which is common when I guess you're at the highest level you've been in the last year.
Yeah, we can see that, you know, this is a point there where we have, you know, hit this high area now here, and we have formed a volume node here around this area, around 107 or so. So that volume node matches up with our 21-day EMA, our shorter-term moving average there, which lines up at just below that 107 mark here. So 104 would be another low area to keep an eye on. It would be our most recent low point that we saw during that short spike downward. To the upside, our +1 standard deviation channel right here, +1 standard deviation beyond our blue linear regression line here. That could be one area to look for potential resistance here, but this area, once again, our linear regression line, our line of best fit, that lines up fairly closely with the lower boundary of our channel here. So another potentially key supportive area to look at there, just below the 100 mark.
Good stuff. Let's take a look at an example trade in this name. Not the most high volatility of stock, but clearly a lot of things from a technical basis that seem to be not only supportive, but pretty clearly in an uptrend. So if you want to go with that trend, you think earnings are going to add to the upside, here's a bullish strategy for Tapestry expiring at the end of the week. Buying a call vertical, 117, 122, $5 wide spread, $1.25 debit. So first thing you should notice, risking $125, break even is at $118.25, but the max profit is $375. So you can go potentially up to 3 times that risk, but you'll need some help from the market, not just to make profit, but even just to break even, as of course that break even is a price higher than the current share price, and this is an out of the money spread. So you'll need a bullish reaction. You'll need a pretty big one to get to that max profit level, but of course a nice uptrend stock and perhaps earnings will only add to that optimism once we get those results. Of course, if you don't have that feeling, this wouldn't be the example to look at. Talk Birkenstock. So this is another name. You know, we were just talking, you know, recent debuts and public companies from CoreWeave. You know, we've talked about Instacart at times. This is a company that it's over a year now, but it hasn't been public all that long either. Looking at the last year though, kind of a sideways looking chart, maybe slightly lower. What do you make of this one?
Yeah, you know, certainly there was some volatility during that year, but you're right. For the most part, you could argue that we have been range bound here. You could even take it a step further and say that for the past, you know, 4 or 5 months or so, we've been compressing in this more triangular shape here. So we have our 2 trend lines both converging toward each other. You could also see our moving averages. The 3 moving averages that we look at here are clustered quite closely together and moving sideways for the most part here. So not really exhibiting a strong directional bias, but price is moving to the upside beyond our 2 shorter term moving averages there, but has so far been halted at our long-term purple 252-day EMA. The longer term, the moving average, the more significant it is when price closes above or below it, you know, to generate that a signal, which in this case a little bit more bullish here as we start to push back above these trend lines here. But as always, earnings could be a big catalyst that could really throw everything for a loop there. For now though, just kind of stuck, kind of moving sideways, as you said, would be the general take.
Yeah, and I think that's almost poetic, given the fact you look at the momentum, basically right in the middle. You look at where those trend lines are not the moving averages are going that are sort of representing trend. They're almost perfectly flat on the longer term basis. They're right at them. We're in the middle of that pattern that's been squeezing to less and less room right at the point of control as well. I imagine earnings is going to play a little bit of a tiebreaker here, but we'll find out. We don't know that yet, but talk to us about this volume, almost as normally distributed as I've ever seen.
Yeah, and you're right, though. That's kind of what you're looking for. That's why we bother trying to find these trend lines and repeated support and resistance areas, is because when you do have the situation where price pushes above some kind of established boundary or below some kind of established boundary here, it can trigger the cascade of orders that result in the breakout and kind of the runaway price activity here. So in this case, we have our lower volatility environment in which price is compressing within these two trend lines here. Our moving averages are all moving sideways. Everything kind of comes together to the upside around where we are now, around that 50-51 area. So if we were to start moving beyond 51, that would be a breakout beyond that trend line. That would be perhaps one level to look at would be 54. If you were to backtrack a little bit here, 54 is where we roughly had a gap open up after a gap downward there. That's also where the volume has a small spike and then really starts to trail off. So that would be one area of interest there. To the downside then, 46.50, recent low point there, that could be supportive based on repeated closing prices around that point.
Rick, if I played a little bit of kind of summary here, safe to say longer term, let's call it for the year, downtrend. Lower high, lower high, lower high, but also lower lows, lower lows. But short term, you talked about some of these short term within this pattern, getting above the moving averages, back to the point of control, slightly above that. It's starting to look like it's starting to get a little bit more improved on the bullish side. But perhaps you need to move above this red line into this area to really break that longer term downtrend.
Yeah, and you're right. Overall, lower highs, lower lows. Like you said, that's kind of the portrait we're seeing here. From this point, we do have a slightly higher low, but we are still declining, as you said there. So, yeah, basically that would be the general read here. This is kind of a critical point where if we don't break above this level here, it opens the door to possibly retesting that low near 46.50. And if that is breached, then who knows? Those tariff news lows would be the next notable point. There's not really a whole lot that stands out other than that to the downside.
Interesting stuff. Looking forward to these earnings. We'll see ultimately which way this one breaks. Rick Ducat, lead market technician for the Schwab Network. Example trade in this, deferring to the longer term trend, but Rick may have convinced me and might have some bullish reasoning that you certainly could look at the inverse of this, or even a combination looking for more of the same, something in the iron condor family. But looking at selling a call vertical above the market in that August expiration, 52.5, 55, so only $2.50 wide spread, looking for 80 cents. That means it's about a 2-to-1 risk reward. You have a chance to make $80 on 170 in risk. Break even is 53.30. So you're up in that sort of 50s. He was talking about 54, that red dashed line. You're up in that area as a potential resistance point for that break even. Again, deferring to that longer term trend. Basically asking this stock to break the downtrend in order for this one, to not work out. So deferring to that trend, perhaps earnings will reinforce it, and this one could work out from an example standpoint. Again, short put vertical maybe would make more sense for that trader who's a little bit more neutral to bullish. That's going to do it for this particular segment, though. Not all big tech is done with earnings. We know NVIDIA's at the end of the month, but we also got Cisco coming up. That's going to be the topic of discussion for our FOMO segment, as we'll be joined by Marley Caden right after this break.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It is time for FOMO. Now, bullish elicits that feeling, perhaps. It's not going to be the subject, but I wanted to do an update as it is trading once again. BLSH, the Peter Thiel-backed, Tom Farley-led digital asset firm, about $90 a share, was as high as 118, as low as 80. So a very, very wide range already in just the first 20, 30 minutes of trading. Certainly one to watch for those who like intraday volatility. Let's talk some Cisco, though. Joining me now, host for the Schwab Network, Marley Caden, is here in studio. We got Cisco earnings after the closing bell this afternoon. Going to probably dominate headlines as we close the market this afternoon, but relatively quiet so far today, down about 1%. As big tech largely is a little bit weaker as I glance at my watch list.
Yeah, and Cisco looking for a big quarter following a strong year today. I think expectations are pretty high, and like you said, they are the big earnings this afternoon. So lots of eyes on here. Expected to report their fiscal fourth quarter profit of 97 cents. That would be up 11% year over year on revenue of $14.6 billion. If they can hit that expectation, it would be a 7% jump in revenue from the year ago quarter. Wall Street will be keeping a very close eye, though, on the networking segment. That brings in the most revenue for Cisco, includes all the gear used in their AI data centers. They're expected to post an 8% uptick in networking revenue, up to $7.34 billion from the year-ago period. So investors definitely looking for that, looking for some trajectory in the coming months to validate the recent stock momentum. As we take a look year-to-date, up in the last year, 55%. Year-to-date, up almost 20%. But what happens could depend on what management says about demand, Alex, for equipment used in infrastructure and or AI data centers. That's been their big boom. They have strategic alliances with NVIDIA, Microsoft, G42, Saudi Arabia's Humane AI. They have this hugely expanded role in these build-outs, not just domestically, worldwide. So because of that, shares are just a touch off of their 52-week high. 52-week high is 72.55, trading about $2 below that right now. But their gains in the last 12 months heavily outperformed the S&P 500 tech sector, which is up about 29% in the same period. One potential risk that all the analysts are flagging, though, is that enterprises may have to cut their budgets, or they may not increase them as much as they otherwise would have because of potential tariff impacts. So analysts think that could be about a bit of some stickiness in terms of Cisco providing guidance, with several of them, including Evercore ISI, saying that they may have to be what Evercore calls prudently conservative rather than risking a miss. And we've seen this earnings season, the street does not like conservative guidance. So it will be interesting to see what comes through in terms of the guidance, what comes through on the call. Valuation here, a little bit of a different story than what we normally talk about, though. As I look right now with their movements today, they're trading at 18 times forward adjusted earnings. So they are sitting below the average, which might be drawing a little bit more investor attention here.
And this is where it's really important for the leadership of these firms to frame it in a way that maybe isn't conservative but cautiously optimistic, or some other way that these analysts can leave this and say, hey, we're excited about 2026 and there's runway for their fiscal year. 4 to 6% top line, though, sort of is where I'm thinking analysts are.
Yeah, that's kind of the line.
That's kind of a replication of what this year is shaping up to be in totality, or at least their fiscal 2025, I should say. But then it puts in perspective, why names like NVIDIA, why names like Meta have been such strong performers. Because you just talked about Cisco outperforming. 5% seems like a reasonable growth for it for a year. Well, Meta's been running at 20 plus for, basically perpetuity and is expected to continue. And NVIDIA, 114% for their fiscal year 2025, still expecting over 50% for 2026. I mean, that's 10 times more growth on the top line than a name like Cisco. So not to disparage Cisco, but I'm almost surprised to see that this has been enough for the street to really see this as a huge winner, because it is just so lackluster compared to some of its big tech peers.
But do you think some of that it's consistent though?
True.
And some of the peers, yes, they've had huge growth, but they've also had some pretty big swings.
Mm-hmm.
Cisco has been more consistent. They have a pretty consistent uptick. Analysts are predominantly positive too, 60% pretty much with a buy rating, 37% with a hold, only 4% with a sell rating. So I mean, we're moderately to fully bullish on Cisco and its future, likely driven, assuming the conversation gears into AI data center build, strong demand for that, continued partnerships, maybe enhanced partnerships or additional partnerships certainly would be a good boost that I think the investors and analysts would like. But those alliances so far are sort of what's keeping them elevated.
Yeah, I think this idea of their innovation and their position going forward, it's not maybe fully come to fruition yet, has excited investors. And, to be fair too, this stock was about $60 a share back in 2019. So it's not like it's been a giant longer term winner. Perhaps some of this has just really been in the last year. And so with that in mind, it maybe makes a little bit more sense as they're turning that corner and maybe brighter times are ahead. Anything else you're looking for in this name? I mean, it's not the most volatile stock, but it's going to have center stage after the close today. It looks like about a 5% moves expected.
Yeah, about a 5%. It's not a particularly volatile stock. I think one thing I saw flagged in a lot of the reports is any more penetration into the federal market has been a big discussion. In their last earnings quarter, they did mention that their Meraki cloud networking solution had gotten FedRAMP authorization, which is a huge deal. That's the authorization that's
there's your consistency, right?
For you to be in any federal security system. So that would enable them to sort of broadly access more mainframes, so that, I think, any update there on Meraki being expanded in any branch federally would be a huge excitement factor.
Well, there's your way to perhaps make that cautiously optimistic revenue growth, if that's ultimately what we get, seem a little bit better with some of those longer term projects perhaps on the horizon. Looking at an example trade quick though, we talked about maybe a 5-ish% move, kind of what the street's looking at, but say you think that that's undershooting what the potential is maybe they're going to surprise here. Maybe they're going to be a little bit more optimistic than the street gives them credit for. I looked at a bullish call diagonal spread in Cisco, buying next Friday's August 22nd 73 call, selling this Friday's 75 call against it, looking to spend, for this example, 70 cents as a debit for the package. So it allows this $2 wide diagonal to theoretically remove that upside risk altogether and also keep this trade relatively small from a notional risk perspective, $70. So not to say that $70 is nothing, but compare it to our other two trades, it's objectively smaller, where we were risking 125 and I guess 80. So all the trades today relatively palpable from a risk perspective. But looking forward to this, I think this could end up being one of the stories of the day, depending on what they have to say. Thanks to Marley Caden, as always, for the breakdown on what to expect for Cisco later on this afternoon. Coming up, we're going to look at some of the restaurant earnings. We got Brinker, we had Kava. We'll get the latest on this space from the CEO of the IFMA right on the other side of this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Welcome back to Next Gen Investing. I'm joined now by Phil Kavarakis, the CEO of the IFMA, the Food Away from Home Association. First, some thoughts on some of the names that reported earnings here in the last 24 hours in Brinker International, parent company of Chili's and Maggiano, as well as Cava. Then, of course, some broad industry takes from an insider. But let's start with some of these earnings if we can, Phil. First off, thanks for joining me again, as always. Let's talk Brinker. Really impressed by the kind of resurgence of Chili's over the last year. What are your thoughts?
Yeah, listen, Alex, they've been on a kick. Kevin Hoffman and his leadership team are incredible. They have found the magic with respect to what they're doing back of the house with efficiencies. They're trimming their menu, 25% reduction of items. They've hit the magic mark when you think about consumer value at the $10 mark. They're comparing, their value to what is happening at McDonald's and QSR, where those prices have taken off. They've done a great job with their appeal to not only their core consumer, but they've got Gen Zs coming to them. They're leveraging social media. They've got some incredible things going on in TikTok. I don't know if you've seen the cheese stretch deal that came on, and they're doing the triple dipper. So they found a way to take promotional value and continue to blow through the stores. They're not adding stores. They're doing efficient work in the back of the house. So they are absolutely the darling, and it's not like he's had soft year-on-year comps. He had some tough comps he's up against. So they're doing everything right, and everybody's talking about them today. I think the stock continues to kill it, as they were out early with double-digit, percentage increases. The other side of this story, which is emblematic of what's happening in our industry, is Cava. And it's a shame that everybody's jumping off the Cava bandwagon, because Cava continues to do some things that are long-term. Their financials were good. They have some moderate issues with traffic this quarter, and they're building for the future. They continue to watch their pricing. They know that they're at the higher end with what you see in casual dining. And they're in a place where they're attracting that professional group that goes out for lunch, brings it back, and it's a $16 or $17 item compared to being in the suburbs and going into a Chili's, where you're going to be able to enjoy an experience and come out of there with a family of 3 or 4 under $30. So the value is a big deal right now across both not only the casual dining space, but also quick serve. The consumer piece is what everybody's fighting over, and knowing that consumers are stretched, they're looking for value. And you got one side of it, traditional side of it, doing great work, and then Cava as a young, up-and-coming chain continuing to build for the future. So they got a little bit of a, they got kicked around today because of the analytics and the financial components that I think are just headwinds that are short-term.
Well, a couple of brief thoughts, and I, of course, want to widen this out to some more broader industry observations and kind of build on what you're saying. But look, if you're a business leader, particularly in a marketing department, and you aren't utilizing some of this new media influencer space, and you need any more proof, I mean, the Chili's resurgence is, exhibit A. Whether you're in apparel, whether you're in, if you're a municipal golf, whatever you are, You're seeing Chili's make this the most incredible turnaround using some of this new media, which I imagine is cheaper than traditional marketing channels. Still, you're doing a disservice to your investor base and your customers by not. But the Kava thing too, and I also think this is important, where as investors and market commentators, we separate successful business from stock price performance, because it sounds like what you're saying, what Kava is doing from a business standpoint, still really, really impressive, and the future's bright. But maybe investors keep wanting the next Chipotle opportunity because of how successful Chipotle was in fast casual. And in some ways, it was just a unicorn in that space, pioneering the space. And it's kind of a unfair expectation to place on some of these companies, Kava included. But Phil, I'll just kick it back to you. Anywhere you want to take it in terms of what you think our viewership should know about restaurants broadly.
No, I agree with you there in the sense that, look, if you're looking for a quick turnaround in the restaurant space right now, this is not the place to get it. This is a much longer term play, given the fact that consumers are completely in a quagmire with respect to what they want and when they want it. Kava has got a great business model. They're planning for, again, like I said, for the long term. They built 16 new stores. They're going to build 70 more. They're really expanding their footprint. They know what they're doing. Chipotle's taking a hit too. They've got tough comps. They're struggling with their input costs, particularly when you think about beef. Same thing with Shake Shack, but they're good businesses. Same thing with Sweet Greens. These new emerging chains over the last several years have proven that they can move through some of the dynamics that we're into the last 2 years with the consumer and the price of goods, the input costs. Now, the other thing people aren't talking about is that they're all investing, particularly the group we just talked about. They're doing things that are going to be more efficient for their back-end operations. They're going to speed wait times up. They're going to be more efficient with their cost controls as they build technology in the back of their house. And that's happening across the board. The good ones are finding opportunities to do it and looking long-term, and they're not getting caught up in people riding the stock or worried about the input costs. They've got great supply chains, and they've mitigated some of the risk. It's all about the consumer and how you talk to them. Clearly, you noted, listen, Chili's was, everybody thought they were dead. Same thing with Applebee's. I mean, that whole category had changed, but if you think about what they're doing, they're minimizing the items on the menu, removing complexity, and focusing in on some creative marketing and messaging. When you think you can go up against McDonald's, where a Big Mac combo meal is at $13.99 across the country, and you can go to Chili's for $10 and have an incredible experience plus a greater sized burger and tastier burger, that tells you that people want to go out. Mm-hmm. And that's what Kevin Hochman keeps talking about. People want to go out, they want a value, they want a good experience. And I think long term you'll see that as some of these winners are continuing to stay with the playbook and not get distracted with some of the things that are coming in and out of the financials these days.
Phil, I want to build on something. I think the price component goes without saying. If that spread between a QSR restaurant and a casual dining experience like Chili's becomes negligible, it makes a lot of sense if you got the time to start going to the higher quality, even if it's just perception. But I also, as I was going through your notes and thinking about things, it seems that the fast casual really was built on the millennials when they were in their 20s. You maybe went to work, went to school, went to the fitness center, popped in at Chipotle or something comparable, went home. But as that demographic ages and starts to build a family, maybe they're making meals at home, maybe they're going to casual dining experiences like Applebee's or Chili's, and it seems that the really key demo that's up for grabs right now is Gen Z, and it seems the Chili's and the Applebee's saw that and are winning that demo. Am I onto something here?
Yeah, early on, exactly. So look, it's the Starbucks story, and they've got a great leader over there, and they're figuring it out to get back to their roots. Because the fact of the matter is, we've evolved. The whole COVID thing completely changed people's behavior, and look at how delivery has impacted this industry with respect to speed and wanting what you want when you want it. You're definitely cued in on this next generation of folks that want experiential. The Z's want some experience. They want value. They want authenticity. And they are the ones that are looking at it and evaluating it on a day-to-day basis. They want the facts, they don't want any gimmicks, and the bottom line is they're going to gravitate to value and quality. I mean, when you look at what's happening in QSR, we're fighting, the QSR folks across the country are fighting a really tough battle right now. It's never been done when you see some of this bifurcation. When they have a $5 menu meal and they're doing things like Minecraft, people are coming into the stores buying stuff. When they don't do any of that, there's no traffic. So you can see the difference between how that group of consumers is built across some of the more loyalty that's built in that next generation as they've been monitoring loyalty programs. They've had affinity programs that have caught their messaging and caught them at a time when they're trying to be prudent with how they're going to spend the money. The good thing that's happening across the industry right now is the fact that gasoline prices are still up and discretionary spending isn't impacted by that, because if that was the case, then it would be even more detrimental to some of the things that are going on. And you also have the folks that have moved, call it, to the suburbs, that are out there with their families, like you indicated, versus the young professional that would go downstairs, grab their bowl, and run back upstairs, and $17 wasn't a problem. So yes, they're onto it. The smart ones are cultivating the information and watching their consumer data, and they're leveraging technology to make sure they're staying very close to their core consumer.
Phil, I can't wait to see where this all goes as this ever-evolving and changing landscape impacts the restaurant space. We'll have to have you back soon and talk about updates as they come, but we got to leave it there. Phil Kavarakis, the CEO of IFMA, the Food Away From Home Association. Going seamless to Mr. Tillis as it's time for Under 30, and we look at a name that's been a topic of discussion for this segment a few times. That's Rigetti Computing, RGTI, one of the players in this quantum space. Now, George, I know it's a post-earnings situation here, but so many of these companies are relatively pre-revenue or very small revenue. Correct me if I'm wrong, quantum is kind of early days. It's still sort of an R&D space, right?
It is, and if you look at the outcomes of quantum computing, eventually they're basically faster processing capabilities that classical computing doesn't offer. But it's still development for the most part in terms of application. But there's also, when we talk about this whole space, I mean, Rigetti is up, I think, 1,700% over the last year. There's obviously a lot of capital flight into these equity spaces contingent upon these revolutionary technologies in quantum computing, which is accelerated computing in terms of next-gen availability, integrated with artificial intelligence. And obviously, there's a lot of players out there in the small-cap space, but in the large-cap space, we talk about other businesses like Google and IBM, for instance, in this space, Microsoft Azure as well in quantum space. But Rigetti does generate revenue, so we have to keep that in mind. That's a positive. They did post earnings today, and if you look at the EPS, they actually missed the estimate. They came in around 13 cents of a loss. That was higher than the estimated 7-cent loss. So it was worse than expected, and a little bit lower than last year, which posted around 9 cents. And sales also are very small for the business, $1.8 million as posted for the quarter. And that was actually a slight miss and down 42% year over year. So if you just annualize the run rate in terms of sales for this fiscal year, they're estimating still around $8.7 million. For what it's worth, the stock valuation, $5.2 billion. That's quite high. And I suggest if you look at some of the breakdown of the numbers, their operating expenses for the quarter were over $20 million. Net losses close to $40 million. So if you annualize that, that's $160 million, which isn't too much relative to a $5.2 billion market cap. But I think one of the reasons why the stock is actually holding up quite well is they did denote they have stronger balance sheet through secondary offerings. Cash on the balance sheet is around $571 million. So again, for what it's worth, that's more than 3 or close to 3 times the annual burn rate for cash. So I think that's one of the reasons why the stock is actually close to flatline, slightly to the upside post earnings, irrespective of the fact that they missed both on sales and earnings.
George, just a longer term story as we've discussed. I saw, McKinsey, love him or hate him, the consulting firm, though, suggesting that this market could be $97 billion by 2035, $198 by 2040. Those are a long time from now, and we have really no idea really what the world will look like at those times, but it goes to show the sort of longer term runway for these companies. Kind of reminds me of the Oklo in the nuclear space. Like, you're betting on an idea and hoping that you found the winner here. Is this a space where these smaller firms can really compete with the NVIDIAs and the Metas of the world?
Well, that's a good question. I think when it comes to their technology, it really comes down to the quantum processes they provide. This company is associated with University of Berkeley, California, Berkeley. Their quantum application programming is very unique relative to others, but it's a race to develop these technologies. This company seems to be well capitalized right now, but their sales are still relatively small. So I think what's happening here, Alex, is that eventually we'll have some sort of quantum computing that's ubiquitous. It just comes down to what market environment we're in. Right now, we're in a very high beta, rich, bullish environment. So that's still propagating these new technologies like quantum computing. But I do suggest, you have to be mindful that the market cap relative to revenues is quite high. And if we do see a significant pullback in some capacity in the overall markets, that these are very high beta names that might be significantly challenged if the market does pull back.
Very well said, and that's where sort of traditional valuation metrics kind of assess the risk for you. But you have to also know that you're investing in potential here, not today. So it's a complex discussion, but certainly a fascinating space and name. George Tillis, appreciate it, as always, good insights. That's going to do it for us here on Next Gen Investing. Watch list up next.
I'm here. We're at the 200 right now. God, that was the nastiest thing I ever seen in my life.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investment.
I couldn't believe it. So I'm sitting there driving up, went to the first place and they closed the building down. So I went to the second one. I seen this nasty old guy walking towards the square and I said, oh my God. I mean, he definitely caught my eye. So I go into the driver's license bureau and who am I standing next to? Oh God. I mean, that guy stunk. I don't think he took a bath in years. I mean, I was looking at his hair and I was just going. And then he went out. He's in front of me, so he goes to the counter and asks a stupid question. And the lady behind the counter took the wipes and wiped her whole desk down. I've never seen a guy look so filthy in my life. I've seen homeless people look better than that. I mean, he was nasty. And I still smell the shit on me. Might have to go in there and take a bath. And I'll show you a picture of this guy. I mean, I had to take a picture. It's just, God, help me. I mean, he was nasty. His shoes were all wore out. It looked like his hair was all natted and he just stunk. I wanted to tell him something. Take a fucking bath. I'm gonna have nightmares of this dude. He needs to rinse and repeat 20 times. That was rough. That was the worst experience I ever had in a driver's place. I'll tell you, what the heck are you doing outside of a cage? I mean, I have respect for people, but damn. Take a bath. I knew I was going to stop, but when I seen him, I was still driving. I said, watch me end up standing next to that guy. I said to myself, I said, I hope he ain't going into the driver's license bureau, please. I'm just glad I didn't get stuck on the same elevator with him. That would have really hurt me. Ugh. Okay. I really need to go take a bath. Oh. $64.60s, yeah. Those are the ones we want to watch. Man. He's 10x worse than Chuck. $64 60s. I need a bath. Whew. Oh, I just can't believe it. It's going to take me a long time to get back to normal after this episode. I wish I had a beer. I'm still in these. I think we're going to go up. But I don't know. I scalped it twice. Once we broke out of this snake and hit that 200, I got right out of it. Then it came back and hit the pivot point inside the channel. See how that channel is? Here. This big old snake. This is a wild ride right here. Then it had a triple bottom. I jumped in it, got out of it at the 200 EMA, and then just jumped right back in it here off the 9, or right before the 9, somewhere in here. So we want to break. Maybe run it up to the orb if we're lucky. God. I don't ever want to go back there again. I make sure I won't go back there in 2 years. Oh, damn. I'm still having nightmares. He looks like a family member too, but clean. I mean, my family member's not that clean, but I mean, this guy, he was 10x. He looked at me once and I said, man, motherfucker, get a bath. I don't care how stupid you are. 380. Profit. Sell sub. Whoop, whoop. Calls flooding in. God. I gotta play a song. I mean, this. Whew.
Washboardjim on the market floor, trading moves like a lion's roar. Sneaky snake slithers past the rest, breakout moves, he plays them best. Jim likes titties and telemarketers too, teaching fools like me and you a work of art. His strategy's tight, Washboardjim in the trading fight.
Fight, 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 fight.
Pullbacks come and the charts will rip. He calls the shots, never loses grip. Selfless soul with a heart of gold, teaching secrets that never get old. Jim likes titties and telemarketers too. Teaching fools like me and you a work of art.
It's a double tight.
Washboardjim in the trading fight.
Fight, 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 fight. Double tight.
Lines and candles, a dance on the screen.
Take some off the table.
World so mean, but Jim just laughs. Tips his whole hat. He's got the moves. Imagine that. Titties and telemarketers too, teaching fools like me
And you.
work of art. His strategy's tight. Washboardjim in the trading fight.
Fight, fight, fight. These are the 6460s from $2.20 to $4. Oh man. Oh boy. We're back at the 9. Yeah. We hit a double top. Oh my God. I'm having nightmares. Whew. I'm still gasping for air. I don't think I've ever held my breath as long as I could. Felt like I was in there holding my breath for 10 minutes. I'm glad it was short line. God. Hold on to your britches here. We're at the 21, so if this wants to stay bullish, we got to hold this or we're going to come down and see 64.53. And we got to break the VWAP on the /ES.
You should get a nine tap on the 5.
Nancy, I'd rather smell you than what I just smelt. Even on your worst day. I stood 10 feet away from this guy and can still smell him, and I'm at home now. I'm afraid to eat anything. I gotta have some rotten fish in there or something to eat. Maybe that'll help. I should change my shirt. I think I will. Put on some cologne, do something. Anybody want to see my titties? My glasses are fogged up still from the filth of that guy. I think they steamed up on me or something. I'll never forget this day. Disney had a run. Disney had a run. Oh, this is always clean, and I do mean clean. May I help you? This is the DNV. Yeah, I want to report a smelling guy. Yeah, I want a complaint. They shouldn't allow a guy like this in the DNV, please. DMV. Yeah, I don't think he had a bath in 10 years. Should be some kind of inspection. Should give the guy 20 bucks, told him to go down and shower. So we got the orb. We're at the 200 on the 2 minute on the ES. Okay, we're back at the 21 here. Should have had some lemonade. Maybe a... Did I have anything for lunch? Yeah, I had soup. Maybe I'll get a couple bites of ice cream. That might help me get in a better mood. I used to be a stand-up comedian. I can go on and on and on. Blue Ribbon Classic with fudge. Chocolate fudge drop. We got a triple top coming up. I could have jumped in these things right here, man. I didn't do it. Triple top. Let's break it. We're going to break it. Orb 64, 62, 67. Lady, I went back to the lady. I said, "Thank you, darling." She was wiping it down with that wipe. That'd be a tough job. You'd have to pay me at least $30 an hour. And I don't even know if that's enough. Triple top. Ice cream helped a little bit. Not enough, but it helped. Just like me and you. God. Knife, just like that. Triple top. Now Jimmy's going to get ready to take his trade. Get back in it. Ooh. There it is. What time is it? Shit. Now. Today's been like this. I mean, it's dangerous. Dangerous. Okay, we got a 1, 2, 3, 4. I want more. Let me see here. I'm going to start. Got to put a line here. I want to make sure I get this right. Damn it. So 64.47. What's that?
Oh my god.
The knife?
No, like right in the middle of the night, my mom and my wife were freaking texting me. I'm about to freaking throw the phone out the window and go stomp on it with a car.
Uh-oh. You're loved. Okay, here we go again. Get ready.
I know, I'm watching the 5 minute. I'm not getting sucked into that 1 minute channel.
I think that's one to go with.
The 5 minute has a good quiz button on it.
I was going to wait for that quad bottom on the 1 minute. But that's on the 5 minute. I'd have to be at 60. I don't know. Two minute, we hit the 200. I've done pretty well here on scalping the 6400s. 6460. But I got stuck in the 6470s.
Yeah, a lot of people got full track today.
I got to put this ice cream up.
Make it out of days like this, green, you know, well.
Yep. I'm surprised. I'll be right back. Tweezer bottom on the 1 minute. Yeah, I could have grabbed them babies. That'd have been a little pretty penny. I didn't look at my spy calls alerts that I had. Let me see here. Oh yeah, I nailed it on my spy alert. Oh wow. Look at the heat map on this thing. I had 642.28. And this was my other one. I didn't put that one on there. Why didn't I put that on there? Huh. I love this heat map. I really do. I think it's going to make a difference. I need to pay more attention to it for sure. But I did call this out before I left. I think I did that before I left. I did these two this morning. $642.67 was that close. Yesterday's close on the body, on the SPY. Perfect. The market does need a correction. There's no doubt in my mind. But NVIDIA's doing a double top here. And we got a triple bottom on Meta. Close to one. Head and shoulders. But are closer to a head and shoulders right there. They got one on Glenstone. Disney new high. Coming back up to a triple top on the SPX. $175 would have been a good price for that. This would be a quad top. Quad. If you count to 4, you can make a little more. We're retouching the shoulder again. Oil and gas continue to drop. Oil and gas continue to drop. But are the fares dropping? No. We break the triple top. Spelunk. Okay. Oh, we have a little pullback here. Yeah. Get ready. Kind of hesitant, but we're at the 63. Ah, I see something. The 200. I see it. Right there at the 200. Head and shoulders. I'm going to go get my tea, and I'll be right back. Well, she bounced off the 63. So next time when I do this, I'll know to add that. These weren't here yet. Or they might have been. I don't think they were. But I should have added that top candle, that closing time on there. That's what I should have done. That's the Fibonacci. Is it automatically on there, I think? Oh, yeah, I have it on there. Perfect. Yeah. See where that Fibonacci? This is called Trend Spider. I kind of like this platform. It gets you familiar with candlestick patterns, chart patterns, and you could add your moving averages to it. So if I took the heat map off, why ain't they showing up? Because I don't have any on here. I have 3 black crows. So let's go to the daily. There's one. That's called an inverted hammer. And there's your chart pattern, your rising wedge. You hit the top of that wedge. This is on the daily. So that would have been a good indicator to know that we should have got puts too. Let's go to the weekly. And that's a megaphone, a rising megaphone on the weekly. That's your 1 hour time frame off the wicks. And I would have done this. On the bodies. And there's a head and shoulders. So I don't know how I come up with that one. How they come up with it. Why did they take that one there instead of this one here? Retail traders activity percentage. There's all my indicators. That's yeah. What are they? I can't remember. VWAP. Oh God, there's this name for it. Hanger. Anchored VWAP. Anchored VWAP. Today's the 13. Back to 350. Okay, we're double topping. We're going to see the 64, 62, 67. I have a real good feeling. That might just give it enough catapult to break it out of there. Spread's widening on the 64-60s for a second. $64, $62, $67. Now what's this? Oh, chart patterns. Take them off for now. Interesting. So Google's down today, Nvidia's down $1.45. AMD is just one strong cookie. Double top, AMD double top on the 10-day. 30-minute. There's a one. I don't know. Head and shoulders. Oh, I gotta go look at my 580. 6470s. Hee. Broke the orb. Studio. We broke the orb. Ouch. Might be no slowing it down now. Oh. No. Here's some interesting stuff on the orb. Sophie's climbing back up. Yeah, it took a pretty good little tug. I wanted to check Dan Ives' pump, AMC. And GME. And what's that? Intel. Microsoft pulled back today, $10. Still overbought, but I got this support right here at 517. Looks like we hit it. Dadgummit. I think I'd have swung that if I'd have caught that last week. We're getting there again. Actually, it could stop right here this time and gain respect off that there. $520.91. Maybe. Okay, we're at the 63. Opportunity could exist right here. These 6460s. What time is it? Oh, it's 2:35. Oh, well, that could cause for more damage. At 265, 250. It could bounce here. $3, 310, 340. I missed it. Yeah, I missed that one. Okay, now we're getting serious. $2.10, $1.95. Prepare ye in the name of the Lord. Who's going to join, baby? Take the risk? Yes. SPX. The 6460s at 175. Calls. That is for me. I'm up. I'm up. I'm up and away. RISKY. We are. Are you serious? We're at 275 already? Oh, damage has been done. 2-minute trade. The damage has been done. 250. Thank you very much. Ladies and gentlemen, I just broke the record in time frame in 2 minutes. In it, not even that long. Less than 2 minutes. I'm out. I'm out. I'm out at 250.
Washboardjim on the market floor, trading moves like a lion's roar. Sneaky swings is past the rest. Breakout moves, he plays them best. Jim likes titties and telemarketers too. Teaching fools like me and you. Work of art, the strategy's tight. Washboardjim
Jimmy
in the
and
trading
night, 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 night.
Pullback come and the charts will rip. He calls the shots, never loses grip. Selfless soul with a heart of gold. Teaching secrets that never get old. Jim likes titties and telemarketers too. Teaching fools like
Me and you.
strategy's tight. Washboardjim
Jim
in the
and
trading
night, 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 night.
Lines and candles, a dance on the screen. Risk and reward in a world so mean. But Jim just laughs. Tips his old hat. He's got the moves. Imagine that. Jim likes titties and telemarketers too. Teaching fools like me and you. A work of art. The strategy's tight. Washboardjim in the trading fight.
That's how you do it. It could be possible. Anything's possible. Even that man at the DMV could have took a bath. That could even be possible. I do believe I saw the dirtiest man I've ever seen in my entire life today. It only took 64 years. I thought Joe Biden was dirty. Dirty old man. I said, what's my luck of me getting in the DMV and him being there? And there he fucking was. Right next to me. That was 7, 8, 10 minutes later. I do believe I saw the dirtiest man I've ever seen in my entire life. I don't feel sorry for someone like that either. I mean, he was with that woman there. If she didn't have no sense telling him to take a bath. It is now 2:47. We have an ascending triangle, rising wedge. Does anybody see the head and shoulders? Do you see it, Funky? Takes you right to the orb. Boom! Head and shoulders. Head and shoulders. Oh. Tell the marketers to. Ah, there it is. Bingoid. 3 white, so, oh! Again, Magnificent gets an A+. Bearish if we hit it, but not this time. Maybe not so late into the day, right? Do you agree? You can give that to Funk this time, okay. He says exactly as scheduled. I've taught him so well. He's my name. You know, I was thinking this morning to myself that I wish everybody in this room was like Funk. Spend your spare time. I mean, it don't take very long. And you have to sacrifice. You have to sacrifice something. It's like I lived with this girl for 10 years. And I couldn't get her interested in backing me up in my trading stocks. I'd scream in the bedroom. She'd be laying down in bed. I'd say, I just made $900 on a penny stock. Okay. Jim, you don't spend enough time with me. Well, it's because I want to make us rich. I want to buy you jewelry. I want to put you in a nice house with a pool. I said, all you got to do is just massage me and give me a good time while I'm sitting here making money. She wouldn't do it. She'd get pissy. I said, I'm done. So I started sleeping in the spare bedroom. I said, man, you're snoring at night. I can't take your snoring. I got to get my rest. God, 680. Woo, look at him. Let me sleep. Please. I still have nightmares. Now she calls up. Jim, will you have me back? Hell no. I'd rather sleep with that stinky old man. At least. I'm sure I saw $8. Head and Shoulders, we've got less than 5 minutes left in the game. And what a day. Total shakeout and then a breakout. I knew today, I even said it, I sat here and said it, I said, I'll just wait for the setups, and I didn't do it again. I got stuck in one trade, but the rest of them all been great. You can see this, the setup right here. It's called an ascending triangle, almost a rising wedge. But with them 3 candles right there, I'm going to call it an ascending triangle because you got them 2 wicks. But it's close to a rising wedge. Just stops short of it. So you got your snake, breakout, pull back, boom! Into a Head and Shoulders. Inverse. God, look at it go. $8.10, $8.20, $8.20. Well, tempting to go out and get something to eat after that horrific day today. I'm not real hungry though. Let's see who has the best salad in Springfield. I might do that. Split Social Kitchen. Fusion Eats is on Glenstone. There's no pictures. There ain't no pictures. God. Fusion bowl with chicken. Oh. Taco bowl. Huh, I might eat that. Okay, well, I had real bad feeling about today, and I skipped a fast one, a couple of them, and then I got stuck. And then I figured I better go ahead and leave. Sit around and mope. So I got on the road. I went to the driver's place to go get my thing, and they were closed, and I had to go across town, downtown, and I'm driving up to the square, and I see this guy crossing the street, and I said, please, tell me he's not going into the DMV. So I pulled in there and parked, and it's around 92 degrees outside, so it's pretty hot today. And I go in there, and there he was, standing in line, naked as a jailbird. And I stood up next to him and stood back about 5-10 feet. No, I asked this other person if they wanted to cut in line. she said no. I said, you want to cut in line? And I looked at him. She says, are you flirting with me? No, she said no. I said, come on, I'll give you $10. No, it ain't worth that. So I stood there and waited, and then he went up there to ask a stupid question. He didn't have no reason to be in there in the first place. He was with this chick that was in there. I was looking at her. You could look at everybody's face, and they're all just kind of looking around. You know, you could smell him a mile away. So I get up to the counter after he walks away, and I give the lady enough time to clean off the counter. She got some wipes out, started wiping off the counter, and I smiled at her and didn't say nothing. And she took a deep breath. Then, may I help you? And I said, yeah. I said, yeah, with a smile. And I said, I didn't get my card so I can get my plates renewed. So you looked me up. And, well, you gave me off the address. And she asked me, do you live in an apartment? I said, yeah. Well, that's why you didn't get it. So she put it in my post office box, and I paid for my 2 years of plates, and I left, and I turned around and looked at her and came back, and I said, thank you for cleaning that table off, darling. And she smiled at me. And I got home, and I had to have a bowl of ice cream before I could wash it out. But I could smell it. I can still smell him. I think I'm going to go put on a dash of, go find this Fusion place. Fusion Eats, somewhere on Glenstone. Stop in there and have me a salad. I wanted to offer a guy some money, but he was with that girl, so I didn't want to. I figured she'd sitting there taking care of him. I said, yeah, you know, can I go out and buy you a new pair of clothes or something, you know? Can I buy you some Head and Shoulders? And I had to, I learned, you got to watch your tongue sometimes, you know. I've learned that in church here lately, and I've learned it, I'm trying to learn it by being a moderator. You got to watch what I say sometimes. But I think if I got too not in my normal norm, I probably, it wouldn't be as much fun. But it just kind of reminds me, you know, some people are just the way they are. You can't I mean, they have the opportunity to change. Some just won't. And I think of Funk, how he sits there and he studies, and it's his number one priority. He knows that he can get this right and make a killing at it, not have to work anymore. I work just so I can stay in shape. If that means anything. I guess I could be showing my face. I haven't shown my face since I've been back. I've been so disgusted. But I don't think I've ever been around I've been around homeless people and I fed homeless people, but this guy, what the fuck are you doing in here? Can't you stand outside? So I wanted to help him, but then I got to thinking she's with him and she'd probably take care of him or helping him out or doing something. So I didn't want to interfere. I had $100 in my pocket. I thought about just giving it to him, but I didn't. So just gotta, next time I'm around someone like that, I gotta be a little bit more, not let it bother me as much. And I'm glad that the line went fast. 5 minutes that I was taking care of business. The Asian lady, she waited outside. She didn't want to go in there. And she looked at me and said, "See you later." I said, "Yeah, leave me here all by myself, honey." But you got to watch your tongue. You know what I mean? Yep. So appreciate everybody in here, and I'm gone. Bye-bye. Ah.